Hey there, listeners. It's been 280 days since our first stream, and here we are. Today is our 100th live stream, and this episode is going to be a very, very special one. We've got five iconic companies, six guests from those five companies, and our first guest for today is Sri, who's the founder and CEO of Servify, a company that has touched many of our lives. Sri, welcome to the show. It's so great to have you with us.
Thank you, Dhruv. Thank you, Utsav.
Srini, thank you for coming on our show. This is really special for us and glad we're starting this with you. So most customers, of course, like you manage over 700 million devices, given that you have tie-ups with all Apple, Samsung, and many of the biggest brands in the world. But most customers do not hear about Servify. So in your words, what is Servify for our listeners?
So we are the engine that keeps running. So those who know V8 when they drive a car, they probably know the engine configuration, but they buy the car for Range Rover, right? So we are the V8 engine behind it. So it might be an Audi platform, Volkswagen platform, but the brand might be something else. So in our case, we are the platform behind the brands. And I think our job is to run that platform going and customers happy. So we are okay not to be known.
But
that makes our life much easier.
But what all does this platform really cover?
So our business is managing the entire life cycle of a device and therefore the consumer using the device. So right from, except for discovery, I think we come in every part of the life cycle for a customer. So which means extended warranty, helping them sell their old product to buying a new product, then extending the product life, then repairs and service and support. And then of course, again, the same life cycle back with the same brand or with some other brand. So that's what we do. And in that, we touch the entire ecosystem. We get the whole ecosystem together, both offline, online, which includes, so for example, for a sale, you need to go to a retail store or an online platform. We are integrated there. And from there to the service, which is including call center to repairs to logistics to parts. And then, of course, when you sell your old product, again, you have buyback partners, again, the logistics, payment gateway. So all of that, we kind of get on our platform. So we are the platform or the engine that makes this journey, seamless and maybe hopefully customers happy.
So Sri, on devices, you work with both Apple and Samsung, who in the marketplace, compete fiercely, and yet your company stands equidistant from both of them. Can you share some lessons from what it takes to navigate that relationship?
Sure. I think, right from day one, our objective is very, very clear. We are not, in that sense, exclusive to a brand, but I think this is a service that is required by every brand. This is a platform that's, it's almost like an ERP for, businesses, right? So we are not really one specific brand centric. The whole idea is there has to be some platform that connects the whole ecosystem, delivers that experience. Of course, the rules of engagement are still kind of decided or designed by the brands. We are only a conduit that makes it happen, which means, again, if you see, for example, logistics, the same Apple uses probably a DHL and Samsung uses DHL, right? So, but at the same time, who brings them together on a common platform and therefore delivers that experience is us. Similarly, payment gateway, similarly, retail. There is no exclusivity per se, but I think what makes it different in our case is we kind of own that experience, and therefore it's not just the brand. We also equally put our skin in the game to deliver that experience. So, which means our success or failure is also dependent on the NPS of the customer. So if we deliver bad experience, then we get penalized. Unlike a retailer who can still sell and say that, product kharab hua, mera zimmedari nahi hai. But in our case, if it goes bad or any experience goes bad, we are equally responsible. And that's our commercial model also. And that's the reason also I think brands love to work with us, because we are really somebody who kind of gets aligned with them, but at the same time, we remain neutral. So we're not really, kind of aligned with one particular brand. We are very neutral, and there is therefore a lot of trust, because since we are neutral, we will not, I mean, we handle ton of data, right? I mean, I can tell you probably, if you give me the serial number of your product, whatever product you use, TV, washing machine, or a phone or a laptop, I can tell you where you bought from, when you bought, or probably how much you paid. We have all of this data, but at the same time, that data is never used for any commercial purposes. So I think that trust being neutral, and of course, platform being the core of it, I think is where we work with all of them. But at the same time, we have our own experiences of different brands having different styles of working, and that's where I think it makes it all the more interesting.
But after sales service, I think that's when a customer is mostly, I think, highest level of frustration at that point of time, right? When that word comes into your mind, and brands want to protect that relationship, because that's when I think an experience can break for a customer. Correct. So how do you tell the brand that, hey, I'm trusting, you trust me with your customer in the moment where I think things can go wrong? So what was your pitch originally when you pitched to Apple, Samsung, and many other brands for the after-sales market?
So I think, Utsav, the difference is we are not in the physical delivery business, which means we don't run any service centers, we don't run any logistics, we don't run parts hubs. That's where we said, look, you still need people in the picture, but we bring the process and technology to enable that delivery experience better. And that's exactly what we do, which means almost in every scenario, we take out the dependency on people to make those biased decisions. For example, if you're setting up an appointment, which is what gives that comfort to a customer, think of it like an Uber experience, right? It's not the driver who decides, मैं गाड़ी लेके जाऊँ कि नहीं जाऊँ, but somebody else, based on multiple parameters, decides he's the right driver for the right customer, right? And that's what kind of, at least at a very high level, we do. So right from kind of eliminating that. I mean, most of the time, if you see, think of, let's say you have an air conditioner. Now you call the call center, and call center speaks whatever they want, right? Instead, we kind of control that language. Now with AI, of course, a lot of additional benefits can be offered, which, you don't even know whether it's a machine talking or a real agent talking. You don't even realize, right? So where you can really control that experience to then deciding which engineer to come at what time, rather than somebody making a manual decision to send certain engineer.
And you had a patent for this also, remote diagnostics as well,
so
right?
We have a lot of, in fact, we've got almost 29 patents now. On the smart digital devices, we have a lot of them, because we can identify even a fake component within a device, to remote diagnostics, to crack screen detection. I mean, think of it now. Typical customer may not be a real customer. It may be a service center trying to flee the system by saying that, sir, warranty mein hai, screen toota hua hai, aap free mein de do. Now, how do you really know that it is actually broken? You can trust and give them a free replacement device or a screen, which again costs, for example, for an iPhone screen, 17, 16 screen, it's 40,000 rupees, right? Versus a platform making that decision, and that's not dependent on people, right? That's where the brands see one, it helps bring efficiency, but also ultimately it delivers the right experience for the right customer. Now, there are also probably 0.5%, 1% customers who try to game the system, but then they don't get the desired service. That's how it differentiates good and bad. Unfortunately, in every business where there is risk, whether it is an insurance, whether it is a lending, whether it is after sales service, it's that 5% customers who kind of spoil the 95% other customers' experience, right? That's where you start with, think of it in insurance, everything starts with a question, doubt. Sir, aap prove karo. You prove that you met with an accident. You prove that you had a surgery, right? Versus in our case, we tried to not have that approach by saying, okay, let the platform identify genuineness here. And that's where remote diagnostic comes in play. That's where, and we have made it very, very non-intrusive. I mean, the whole idea is, think of it in our insurance business when we sell an extended warranty. How do I know that the customer is not buying after there is a breakage, or a retailer is selling on a broken device, right? That's where we have those integrations where we know the date of purchase and the point of sale data. So I know that if it is sold on the same day and then somebody is buying an extended coverage on the same day, I don't need to do any remote diagnostics. I don't even ask the customer for a bill. At the same time, if the customer is buying, let's say within 60 days, 90 days, 1 year, then customer has to just give a consent, and within 4 seconds, it tells the results that whether the product is good, bad, rather than customer again having to go to a service center or asking someone. So we kind of changed that approach, which was historically done very, very manually. And that's where, I mean, the brands love us because it brings down that cost, but at the same time doesn't impact experience. And again, our belief is we want to start with trust rather than mistrust. I mean, it's those 5% customers who are really gaming the system, right? So why do you make 95% of the other customers suffer by uploading documents, pictures, giving explanations? So we said, let's commercially solve it also if there is 1 or 2% fraud, but 98% customers who are genuine should get the right experience. I think that's been the principle, which is where platform and tech and all of that made a difference.
Shri, the internet, as we all know, has been a great equalizer for extending opportunity, and devices are a big part of it. India is obviously a very value-sensitive market. Can you talk to us about how many of these affordability solutions have come into being and what it takes to deliver them, like trade-in devices and refurbishment?
Yeah, so like rightly said, India is a affordability sensitive market, right? So almost about 40% of the smartphones are sold on affordability and sponsored affordability. When I say affordability, sponsored, I'm not including the discounts, right? I'm talking about the no cost EMI, card cashbacks, and all of that. Again, when we run some of these on behalf of again, the brands want to extend this benefit to the customers, but they don't have direct access other than their own stores or .com or the websites, right? And that's probably less than 5%, 8% of the total sale. But 90% plus is done through physical retail. And that's where our platform again comes in play. And we kind of ensure that all of that benefit goes to the customer real. Like when you do a trade-in, if you get a bonus, 5,000 extra for trading in your old phone and buying a new, let's say, iPhone. How do you know that the customer is actually traded in a device? Because all that you need is an old serial number. That's the only requirement in the system language, right? But the retailer can give you any serial number if they want. So in our case, that's where we come in picture. We physically validate the device. There is a platform that we build where diagnostic happens, and then you know that it is being sold to another party. So the entire transaction trail is also kept. Only to such customer, the 5,000 or whatever money goes directly again, without again going through the retail ecosystem where there is possibility of a leakage. So I think a lot of these things is what we enable. Similar is the case with loans. A lot of the times, again, loans do happen without actually a device. I mean, again, like I said, it is 1 or 2% of the cases. That's where the technology makes it, again, activation data is captured real time, linked to a loan, and then you know that there is a bank behind it. So multiple places we kind of intervene to ensure that all these benefits given to the customers are really genuine. And again, it is seamless. So I think affordability again is a key aspect. I mean, it's now not just in India, in multiple other markets where people identify that, this 1 or 2% is where their, commercials go for a toss. And if the customer is not really getting the benefit, where does it go? So again, our platform is now being used as a kind of audit tool, so to say, which never was the idea. Our idea was to deliver that experience to the right customer, but I think it's now becoming kind of a benchmark.
And some of these integrations that you mentioned, including the tech, I think must be really hard because we've highlighted Apple and Samsung. But those are the brand side. You might have to tie up with like telcos and many other partners. Which one was harder to crack in that journey?
Oh, I think all of them probably. The problem is, these are large companies. So you can imagine, in our case, our entire sales cycle, typical enterprise sales cycle, anywhere from 12 to 18 months just to go live with one program. I mean, I'll give an example. Let's say I'll give you two examples. One, an OEM partnership like a Samsung or an Apple. I mean, I'll take Samsung as an example. I know this is live, so I will probably talk about what I can talk. Now, if I have to enable Samsung Care Plus on a Samsung ecosystem, I have to integrate with Samsung.com, which is where product is sold. I have to integrate with Amazon Flipkart, second integration. The customer can also buy from the physical retail. So obviously all the retail channels, that includes the Vijay Sales and the Chromas and the smaller ones to the bigger ones. The customer can also buy from Samsung's own exclusive stores. Again, therefore, integration with the Samsung retail platform. Then the customer can also use the same Galaxy app, which is there in the device for every support experience. So Samsung Galaxy integration. Then we have to integrate with service system of Samsung, GSPN or Service Power or different systems because a customer can ask for service later. Then you have to integrate with their activation systems, the bill of material system, to know that whether the product is actually owned or manufactured by Samsung. So it's just 7 different systems. Now, this is one
7
country.
different systems and probably across countries as well.
Across
right?
countries. Now, different countries may have different systems because all this, royalty settlements, their sales data. In India, they may use an SAP. In the US, they may use some other ERP. So it's not just one system in many countries used by some of these global brands because they've grown so big. Each country has adopted their own kind of preferred CRM or a retail platform or an ERP, and that's on the OEM side. Obviously, then when you talk about the telcos, the complexity goes even one notch higher. I mean, because some of these, like AT&T, I think we did some 17 different system integrations within AT&T to go live. Now think of it right from the sales experience or BD efforts, which probably takes 3, 6, 12 months. Then you go through a contracting phase, which is like 6 months, 8 months, in some cases, 12 months plus. We've had that also. And then you have integration, which is where, again, you need to have resources available on the other side. So again, all that timing. So in some cases, we win a contract on year 1, we go live on year 3. I mean, we have one large computer brand, which is, we've contracted, I think in 2024 December, we've still not gone live. This is 26 June, right? Because we're still in the middle of integration. We took about a year plus for contracting. We've won 17 or 18 countries to go live. And the unfortunate part, or the fortunate part, which is where, we have stickiness, all these individual countries are P&L for them individually. So every single country, we have to sign a contract. And that is where it takes time. But the beauty is once you are like some of the big brands that we have, Apple, Samsung, etc. today, we've done this over multiple countries already. So once you have that, again, then you have to expand by channel. So you go through offline mode first, then online channels, then exclusive channels or websites. So again, we have a kind of roadmap. So I mean, I'm not complaining. It's a very, very hard business to really scale. But the beauty is once you are in, it's almost like a very, very sticky business because if they have to replace it or change with someone, again, they have to go through that entire cycle. Unless we do such a bad job, I don't see a reason why people should change from us.
Sri, there's a question from someone who's listening in on YouTube, Alexandra, and she asks, what percentage of customers who purchase an extended warranty actually end up using it? Huh? This is a question I've also always had.
Excellent. No, any typical insurance
I've always
business,
had this question before, like, I mean, when you're checking out and buying an iPhone, it says Apple Care Plus, do you want this thing? And then you make that trade-off that if I use it with a cover, then I won't have to like buy it.
So
that's a very valid question.
No, I think it's like any insurance product or any risk product, it's only a small percentage. But I think the fee you pay for the convenience is far more valuable than is far lesser compared to the value you get if there has to be an incident. So it's almost like your car insurance, right? You don't want an accident to happen, but if there is an accident, then there is a cover. So very similar. It's generally in single digit percentages on an annual basis. So maybe 6, 7, 8%. Again, it varies by country. Like in India, the percentage is slightly higher because large population moves in two-wheelers and the conditions of the roads at times versus some of the Western countries where people drive on a car, and even, I mean, the chances of a drop are much lower. So again, it varies by country. And therefore, the pricing also, obviously, because at the end of the day, how do you price this offering is based on the frequency of failure and the average cost of service during a failure. And again, damages and extended coverage, again, all of the mechanical or manufacturing issues are also covered. So again, it's a combination of that failure percentage or frequency and what is the average cost of serving during such an incident is what determines the cost of this offering. So basically, it's a single digit percentage in most cases. At least, I would say, at least for almost all the electronics category. It's slightly higher for some other categories, but electronics, it's single digit in a year. I mean, think of it, if 100 people buy, maybe 7 people come with a claim. But the beauty is those 7 could be you, right? One of the 7 could be you. And if you have to pay from your own pocket, then it's like 5x, 8x the amount you pay for this coverage.
And congrats for the scale that your business has hit. It's a beta positive now. And in device protection market, where is the real money made? Is it underwriting risk, which is the insurance and other things? Is it software, or is it the repair after sales repair market? Like how is the revenue shaping up for you?
Yeah, so it is the retailers who make the most money because it's a value-added services they sell, right? So obviously it's an assisted sale, so they deserve to make money. I mean, I'll give you an example. I'll give you in INR terms, and then I'll also probably give a dollar term comparison. If you are selling a 1 lakh rupee iPhone as a retailer, you may end up making 2,000 rupees because of the fierce competition, cost of financing, obsolescence, inventory carrying cost, all of that, right? So you end up making a net of 1 to 2,000 rupees because you have also models that keep changing. So sometimes you have excess inventory, so you have to discount, and you have always competition. So that's how retailers make money, which is very tiny. So compared to the investment they make, it's about 1 or 2%, right? 1 lakh rupees, and they make about 2,000 rupees. But when they sell an extended warranty on the same iPhone, which may retail at, let's say, 9,000 rupees for customer, they end up making nearly 4,000 rupees. And the beauty is it's a digital product. There is no upfront cash. So it's a negative working model, capital business for them because they pay us after the customer is paid. So they collect the money upfront, and then there is a credit cycle with us. So typically it's a very interesting business for a retailer. Forget us or anybody for that matter. This business is a negative working capital business for a retailer. And in terms of the net money you make, this is far, far better money, right? I mean, straight away profits. So, but at the same time, it all depends on the attach. You don't sell extended warranty on 100% of the base. It's only a certain percentage, maybe 20%, 15%, 20%, 25% customers who buy. So, but at the same time, when you look from a retailer's lens, financially, this is one of the most profitable businesses for them, like your accessory business. So it's typically the value-added services business is where the retailers make money. Telcos, retailers, that's where, if you see globally, telcos like AT&T or a Verizon or a T-Mobile, like AT&T example, I'll give you public information, about $180 billion of total revenue. And this is handset sales included, network service included. And out of this, about $6 billion is device protection, extended warranty, in which they make a net profit of about $2.5 billion. Now, top line, it might be 180, but the profits they make from a $6 billion business is $2.5 billion, and from all others is about $7 billion. So you can imagine this is like 1/3 of the total profits. That's what the retailers love. So if you ask me, retailers make the most money in the pecking order. Then is where OEMs or the service providers make money. In this case, because we work with only OEMs, because our belief is customer deserves to get original support, global coverage, OEMs backing, and all of that. Because at the end of the day, you still bought an iPhone or a Samsung phone. You've not bought an AT&T's phone or a Chroma's phone, right? So our belief is it has to be still supported by an OEM and globally. And therefore, the OEMs deserve to make that money. And of course, they make money from the bill of material, difference between the bill of material price and the cost of actual repairs. So it goes back to them. And of course, there is a math there. And in our case, because it's also a model where we kind of share certain royalty money because we get to use the brand name. So that's a second revenue. So basically, after sales service, which was earlier a cost center, is now a profit center for most brands. Okay, so they make money. Third is, of course, everybody else in the ecosystem, whether it is insurers from the underwriting profits, because we pay upfront premium and they get to enjoy the float, or us. And in our case, the more efficient we become, because ours is a fee business. We don't charge the full money to the customer or anybody, or nor do we consider in our revenue, right? Our revenue is just the fee we make. So it's whatever that tiny 5% of the total value or 8%. But for us, it's a high margin business, therefore. But still, it's every dollar that we fight for by bringing in more efficiencies, controlling risk better, or distributing it more. So I think all of that, therefore, in the pecking order, retailer, OEM, or the service provider, and then people like us who are administrators.
And Sri, as you think about extending the Servify offering beyond laptops and mobiles to consumer appliances, home appliances, obviously over there, a lot of those appliances have to be serviced at home. How are you guys thinking about it? Will the service network look markedly different? What are your thoughts?
So again, in our case, our approach is OEM only, which means we again integrate with the OEMs, but we control that narrative in terms of when there's a failure, the service request generation to the entire experience is what we control. So again, for example, for Samsung or LG or for Panasonic or many other brands in India, the extended warranty for all the white goods is also powered by Servify. So which means if the customer has an issue, again, if they go through the same support channel, it could be Samsung helpline, Samsung.com, Samsung app, but all that experience in terms of scheduling to transparency to service delivery is kind of controlled by us because ultimately we own that experience on behalf of the customer. So again, we use the OEM network. So luckily for us, we are an asset light business. Like I said, it's more of a platform business for us rather than a people heavy business, unlike many other, competitors who run their own service network by appointing third parties, etc. In our case, we don't have that. Second, we get to work with a control channel. OEM's authorized network is always a controlled channel because there are audits, there are systems and practices in place. OEM does a lot of intervention in terms of the delivery quality to parts to all of that, right? Unlike a third party who can use whatever parts they want. In our case, it's therefore much more controlled and therefore customer gets a better experience. But at the same time, it's fully done through OEM network only. We don't really, in fact, we made an acquisition which actually does service on ground, which is again aligned with all the OEMs.
So a two-part question. What part of your business is global in terms of just percentage of revenue? And also second, it is a heavy regulated business in many countries, right? Device protection and after-sales market. So do you approach different countries differently or do you just stay away from some countries? How has your approach been when you scaled up over 40 countries?
Fantastic question. So yes, about 55% today is global business, international business, and 45% is India. Obviously, because we started from India and India had a head start before. And our belief is, in fact, until 2 years ago, we used to say that building from India for the world. Now we are saying that we will be an India dominant business because the opportunity in India, think of it. I mean, US, 350 million people, India, 1.5 billion, 1.4 billion people, right? Now, imagine if 8 to 10% of India becomes high net worth individual, which is what is expected in the next 5 years or so. That's 150 million people, which is almost like the affluent base of US, right? So our belief is India will evolve to that, and business like ours, which is a very, very low attached business because of, people don't even buy health insurance in India, right? So imagine if that starts changing and things become much simpler, like monthly billing, etc., which is what we've started even in India. I think India will continue to be a dominant share of our business. But again, at least for now, 55% is India, and in the next 3 years, at least as per our budget, India will be about 25 to 30%, and 70% will be international, because everything is growing in India too. In terms of the compliances, yes, it's a heavily regulated business in most of the markets. I would especially call out Europe compared to all others as the most difficult one, probably most bureaucratic approach to this. And I think it's probably because insurance is a very evolved business there. There are a lot of rules. We need to get all the licenses, filings. So in terms of wherever we enter, the approach is, obviously there are 3 things that we see in our launch cohort, if I have to see. One is how big the opportunity is. Is it our existing partners asking us to go, like an Apple or a Samsung, or because then we have already an existing partner. Like when we sign with some of these brands, we sign multiple countries at once. Like we have not entered LATAM yet. Now we are under pressure to launch LATAM because we have 2 or 3 large brands like Apple, Samsung, etc., telling us to go there. So obviously the brand and therefore market share. Because if you are already entering, let's say, with due respect, maybe let's say, one tiny brand which is telling us to launch in Japan, we will not even start, right? Because it takes a lot of effort for us to get the license, have people set up integrations, all of that. So obviously we need sizable business opportunity. So it's one, the partner who is asking us to launch, how big the partner is. Second is the ASP in that market. Again, for us, if it is below $200, below $250, it doesn't really make sense for us. The product has to be at least $250 and above. So therefore, Apple, Samsung, and high-end brands make a lot of sense. Third is the ease of doing business in that country. Like we've entered, or similarity to India structure. So we do business in Turkey, we do business in Saudi, which are extremely complex, distribution heavy, potentially, risky markets, or I would not call it fraudulent, but high mis or malpractices. But technology helps you arrest all of that. That is where, for us, it's highly efficient business. In fact, our Saudi business is profitable from the second year. Turkey is profitable from the second year because the technology brings so much efficiency, right? Of course, it's a tiny business yet compared to India or US. But again, the way we approach the market with tech first integrations and all of that with less people, I think really helps us bring efficiency.
And I think as a final closing question, because we're almost at the end of time for this segment, today is Apple's developer conference, WWDC. I'm an Apple fanboy since a very, very long time. So how does a man from Dharavi go to Apple Park, convince them that they have to become a preferred partner, and also get to meet Tim Cook?
Yeah, so I think I would say it was just sheer luck. In fact, the story is when I last worked with Nokia, and of course, Nokia was the largest brand, electronics brands or mobile phone brand in the world with 70% market share in India, 40% globally. And I had seen iPhone launch, and I used to travel a lot. Uh, I had experienced Apple Store and all of that. And when I wanted to start my first business in 2009, I wrote to a lady called Tara Bunch, who's now I think she just retired as a CEO of Airbnb. She was the head of care at Apple and sustainability and multiple other initiatives. I wrote to her random email saying, hey, I want to replicate that experience in India. She responded. She said, yeah, come and present to me. And I said, when? She said, yeah, come whenever you want. I said, I'm from India. She said, okay, set up some time. I mean, I think that's the openness that brand has. And I think that's the culture Steve Jobs has built. And from then, I would say no looking back. Of course, a lot of people helped in the journey, right? From people like Ashish Bali in India, who was the head of service back then, who was the first person to really push. And we had some of our own requirements saying, we need integration with Apple systems so we can deliver that experience. I don't think anybody would say yes, but Apple said yes. They said, okay, we want to make sure that you can manage our data safe. So I signed some 700-page contract, including probably potentially going to jail if I misuse. But I think all of that, some company had that openness. And I think that's the power of brand like Apple, which is where, they are still number one when almost everybody now tells that they've stopped innovation, right? But they are still what they are. So I think that was great. And then I got to meet Tim Cook also because we became a preferred partner. We delivered experience consistently. And I think in this kind of business, affordability, Apple Care, and multiple others, I think we did way better than anybody they could think of. So I think I think hard work really paid off, I would say.
Sri, thank you so much for coming on our episode 100.
Thanks, Utsav. Thanks, Dhruv.
Really
Thanks,
appreciate this.
everybody.
Thank you so much.
Yeah, fantastic.
Yes. Thank you. All right, listeners, we're moving on to our next guest, Kanika of Square Yards. Kanika, welcome to the show. Thank you for coming on our stream number 100. This is special for us. So thank you for giving us the time. Can you explain what Square Yards does in your business, in your own words? I think we're having some internet issues.
Looks like.
Kanika, sorry. That you.
Oh.
As I keep saying, this
Hello?
is just proof that we do this live. Hi, Kanika.
Sorry, I think.
Yeah, just a second.
Do you quickly want to run through, Dhruv, what the news was? I think we've shortlisted some things that have happened in the last week, especially the SpaceX IPO that's happening this week. I think that's pretty exciting. 920 million a month compute deal they've signed with Google. So everyone was writing off Elon and XAI in the AI space, but I think they're really getting 11 billion from this deal. All right, let's bring Kanika on again. Kanika, can you hear us?
While we wait for Kanika to join us, he was saying, so Elon, never bet against Elon. He's back.
Never, yeah. 11 billion just from this deal. And I think all of this coming at a good time because now I think the multiple on SpaceX IPO has gone from 100x to 50x. So it's looking 2x more attractive now to enter this. And apparently the IPO is also oversubscribed. They've not mentioned a number, but $75 billion IPO they're raising from retail mostly is oversubscribed. So I think that's a solid thing. And did you read the Anthropic letter that just came out where they're saying that AI is already building AI and all labs are signing a letter or suggesting a letter where they pause AI development activity just so that the world can catch up in terms of regulations and just being prepared from a security perspective.
I think the naysayers are going to say they've run out of compute again. Every time that happens, they put out a public call to slow things down. But once they figure it out, things are accelerating again.
Yeah, I think it's it's just insane. Like what's truly happening. Like I think some of the companies in the startup world are saying that most of their code is already written by Claude. And I think
it is.
Yeah, some people are saying that they've not written code in like over 2 years now, actually. So I think it's becoming pretty exciting. And that's why the bots are now outnumbering humans online. For first time in history, that bot or agentic traffic on the internet has overtaken humans. So exciting stuff happening, I think, overall in this agentic AI space as well. And soon they're going to be shopping for us as well. So, yeah.
Looks like Kanika's back. Kanika, I think what will be best is that we just start from the beginning. And yes, just from the beginning, have you talk about Square Yards very quickly for those listeners who may have missed out what you said. And then we'll take it from
there. So sorry for the confusion earlier. So let me start with
Let's introduce Square Yards again.
Yes, same here. So Square Yards, like I was saying, is largest PropTech platform in India. We facilitate end-to-end home buying journey. We help people search home, transact home, finance home, and renovate homes. Last few years have been fantastic for us. We've grown at 50% growth rate. We ended last year at 2080 crores and 175 crores of EBITDA. We are one of the only consumer tech startups to operate at a trisection of growth, scale, and profitability currently in India.
And building this two-sided marketplace in a sector where both buyers, developers, this whole industry has worked in a certain way before. And how did you decide to build in this space, and have you faced resistance?
Yeah. The hard part, in fact, isn't even the technology. It's the behavior. So if you see like both sides, whether it's buyers or developers have had decades of habit and mutual suspicion. A marketplace only works if each side genuinely gets more than the other way gave them, right? So to build a buyer side trust, we had to build transparency tools like verified listing, data analytics, 3D walkthroughs. So when a buyer walks in, they are informed rather than dependent on what just a broker is telling them. And to win the developer side trust, we brought predictable large-scale demand and a professional sales engine. And we became a channel that they could rely on, not just another listing site. And over time, this trust compounds. We then invested in services like after sales, mortgages, revenue renovation, which is where the most player drop off. So that's what worked for us.
Kanika, what did it take to convince people they could actually buy or rent a home on the internet in the first place? It's the last thing you would buy off the internet.
Yes, correctly said. Property is such a high ticket, emotional, and infrequent purchase that people don't like just check out, right? A home. It's not like any other grocery or gadget you're buying. So online couldn't mean replacing the human. It had to mean like removing the blind spots before a human conversation, according to us. So our job was to make the digital experience richer than a site visit in some way, which we did through 3D walkthroughs, digital twin experience, real-time pricing, and fixing everything in one place, like putting all the information together. And the most important leg which we solved for a consumer was democratizing the actual transaction data and bringing transparency into real estate transaction, which was not there initially when we started.
And you guys were an NRI couple in Hong Kong, and you couldn't buy property online or couldn't find a convenient way to buy a property in India. So that's why you decided to start Square Yards. But now you yourself operate in many other markets. So how does a consumer and the market behavior vary across the different countries that you work in? Maybe give us a landscape of the different countries that you're operating right now.
Yeah. So we operate across India and Middle East. We've got a small presence in Australia and Canada, and cross-border business for us is like 20% right now of our transactions. So I've seen a lot of these market up close. And what's really different or what standouts in these mature markets like in Canada, Australia, UK versus India is that most of these markets have clear titles. They have MIS style data. Where very standardized financing procedures. The data is very, very transparent and very democratically available. Whereas in India, it doesn't exist, right? For fragmented, it was for decades, it was very fragmented, informal, opaque, and which most people saw it as a problem. For us, it was an entry point because we weren't entering an organized market. We were betting on the asymmetry which existed, right? So RERA came, they changed the rules, land records went digital. There was already a lot of formalization which was happening when we entered. And that was not just the problem, this was just tip of the iceberg. The real problem was the sheer scale which kept me up at the night when we started. India needs to build 50 million homes over the next 2 decades. And right now it builds under 1 million over a year. So there is a huge difference in the demand and the supply. And this gap is not a crisis. This gap is the story of the next generation of Indian real estate, where we see an opportunity. And this is the $1 billion opportunity on which Square Yards would leverage.
Kanika, we were just talking about the diaspora earlier, and they happen to be active home buyers in India. Can you share lessons from serving them as customers? We have different startups building different products and services for NRIs right now. I was talking with one founder, and he said, we're not really selling this product. What we're selling is peace of mind. So talk to us about what it takes to serve diaspora with any product or service for that matter.
Yeah. So recently we started home interiors as a segment. And this was just an add-on service on top of the transactions which we were doing on the real estate side. And nobody talks about what happens when you buy a home. And everything just falls apart, right? So we were sitting on thousands of customers who had just bought a home. The transaction was done, but their stress wasn't. So they had to make it livable, right? And they had no idea where to start. With that thought, we built Interior Company, which is now a tech-led design and renovation platform. You can see your home in 3D before a single nail goes in. What you see is what you get. And no surprises on design, no surprises on budget. And the market responded faster to that than what we expected.
Interesting. But talking about some big developments in the company on the company front, you guys are going public, and in the process of going public, I think you filed for papers or preparing to file papers. What do you think will change as a company?
Yeah, going public is just another milestone in our journey, and I think a journey of building legacies. It does mean more accountability, in my view, more compliances, more transparency, but we're up for that challenge. We've been doing that for a few years now, so hoping everything turns out just fine, and wish us luck.
Wishing you all the best. I think life shifts from a private to a public one, where I think founders have to live quarter on quarter. We've had, founders on the show who've run IPO startups as well, IPO tech companies and such. And they say that not much changes, but on the outside, you're judged every quarter to quarter.
But Kanika, I don't know if now is going to be the time for doing it, but there's one problem I think only you guys can solve, which is for a lot of founders, getting a home loan becomes problematic because they're not drawing regular salary, etc. Again, just from the ecosystem remains an unsolved problem. I think we'd love to see you guys take a crack at solving it whenever, whenever the time is right.
Yes. So in fact, our home loan business is equal or probably doing better than our initial transaction. And that's just, again, goes on to say that when you solve a problem, you start solving it from the bottom, and then you realize there are more ends to it, more folds to it, and you go deeper and deeper into that problem. And eventually those parts bigger than the initial problem which you had thought.
I have a personal question. I think a lot of people on our YouTube chat live stream are asking about what does the average homeowner look like today? Like in terms of age, when do they decide to buy their home? Have you seen those changes across generations from Gen Zs, millennials, and boomers? Like how is that? Shift happening? The home buying age
journey
shift,
of home ownership,
home ownership, and many other things like preferences and other things.
So India, I feel, is an urbanization growth story, like I previously said. Majority of the demand which comes and people who are buying home are first-time home buyers. So that would typically mean somebody who has just started job, done it for 4-5 years. So 30 to 40 year is an ideal age. Most of these people are coming to metros, who were living in tier 2, tier 3 cities, and they've come to these cities for jobs. So it is more of buildings and projects by developer high rises rather than standalone properties. And the problem at hand is that there are so many metros and so many urban cities which we already have. And if we have to move from a demand of 1 million a year to eventually 10 million a year, we would have to come up with bigger cities, newer hot centers. And that's where the government is doing and focusing a lot to come up and, bring up more cities where this urbanization and this development can happen.
In fact, speaking of Kanika, outside the tier 1, where is the greenfield development taking place right now on the map?
Yeah, so there is a lot of development in newer upcoming cities like Ahmedabad, like the whole Gujarat belt, and there is a lot happening in Karnataka, Hyderabad. So these are the newer centers which are developing, where we see there is a huge rise in young people who are buying properties, first-time homeowners, and that's where the volume explosion is happening currently.
And how is real estate changing in the world of AI? Like you said that AI is, of course, driving a lot of changes in terms of technology and the experience for buyers. But can you highlight some specific changes that you are seeing at Square Yards and people who are transacting with you?
So AI isn't new to us. We've been building for this since like a lot of years since we started. We in fact did an acquisition of a company called PropVR, which was a trendsetter and industry leader 7-8 years ago. And we acquired that company. It does 3D visualization. It builds digital twins of properties, heavy data analytics across the platform. What's changed now is the speed with which everything is happening around us in the world. And recently we announced that today itself that we've built a captive AI app which went live, first native app which went live on ChatGPT. We're building a captive agentic AI, processing thousands of call records to standardize our product and service offering. improving efficiency, which, humans miss at a scale. And on consumer side, like I said, our first native app, ChatGPT app, went for Real Estate Live. This will make property search conversational instead of transactional. So you don't have to go through hundreds of listings to decide what you want. You ask like a friend that, hey, I'm looking for a property in Bangalore, which fits my budget. There is my office. This is the school my kid goes to. Can you suggest the ideal fit? And that app will give you suggestions. The hype is when AI becomes a marketing word to me, and reality is when it changes what your customer actually feel. And this is what we're trying to do.
And outside of AI, Kanika, I'm curious, like, what are some cultural expectations Indian home buyers have in terms of vastu or having a prayer room or like a mandir or something in home that just make this a very unique market to serve? Also, do you find similar expectations in other parts of the world as well?
Every country, every part of the world, and this comes more from my experience interacting and designing homes for people on the interior side, is very unique. How we approach a design home in a place like Dubai would be very different from how we would approach it in India. And that's what, makes it interesting. That's what makes it very engaging for us as a company, as well as trying to solve real problems, trying to understand what a customer wants and give those customized, tailor-made solutions to everybody's requirement.
And where does Indian real estate go from here? I think a lot of people are debating on X about hype, bubble, overpriced, underpriced, some other new pockets coming up. So where do you think it goes for the residential real estate market of India from here?
India is a long-term urbanization story. There will always be, peaks. There will always be phases where the demand would seem like unjustified in terms of pricing. But at the bottom of it, from the long-term perspective, Indian market has to explode. It has to go in that direction because we have so many people who need homes. Like all these new people, when they migrate to city, they will need home. So what we need is the market to organize itself from a regulation, from structured financing, from digitization of records. I feel it's a one-way door. And the buyers, they are changing with it as well. They're going to expect search, transaction, financing, interiors, property management to feel like one seamless experience. It cannot be somebody just telling them that this data to buy and exit that journey. And that's what we are trying to build with Square Yards, a data and transaction backbone for the entire home ownership journey, which is AI native and obviously profitable. It cannot be a cash burning business. Unlike a lot of startups, there was a wave. From the very start, our goal was always to build a viable, profitable business. And the goal is simple: to own the entire home ownership journey, not just the transaction, not just the search. And every decision, every step, every market then stacks up.
And we should end this session with some lessons for founders. What do people usually misunderstand about building a company? And the scale that you have.
I feel like being an entrepreneur feel very glamorous from outside. My advice to people would be that don't do it till you're absolutely passionate about it. It is not about valuation. It is not about funding rounds and instant gratification. It is about building and believing in a legacy which outlives you. And perseverance is a very overrated and very, very abused word. But I feel it is absolutely critical and the most important value system which any founder needs to succeed.
Awesome. Thank you so much for coming on our show, Kanika. This was special for us.
Yes. Lovely talking to you, both of you.
Such a pleasure. Thank you.
Thank you. Thank you. Thank you. All right, listeners, we're moving on to our third guest. We have our next guest with us now, Ronnie Screwvala. Ronnie, welcome to TON. This is episode 100 for us. Really, really special. The show
a lot of people just missing their centuries in IPL. So I guess it's much more relevant that you're hitting a century this time. So that's good.
You've had so many colorful chapters in your life. So I want to do a recap and ask you how you answer this question. So UTV started in 1990, exited to Disney by 2012, upGrad in 2015, RSVP in 2017. 50 million deep tech fund in 2025. Those are 5 very different chapters. So when you sit at a dinner table and somebody asks you, what do you do? How do you answer that question now?
Actually, my dinner tables are quite quiet, to be honest. They're very quiet. So not too many of those dinner conversations. But on a more serious note, I think if I were to describe cable TV and toothbrushes, I would call that the sort of opportunistic stage of life. You're naive and you're opportunistic. I think when one started to build a media company and UTV came about, and that 10 to 15 years journey, I think was more creative, scaling, creative, innovation. And I think today, when I'm looking at upGrad and our Swadesh Foundation, I think it's much more what I would call just institution building. So I think that's the way I would do it. I think if I were to describe earlier chapters, I would say speed was important, and today I think for me compounding and impact is much more important, and that's the evolution that is sort of taking place. And when you're in your 20s, you think of things from weeks. When you're in your 40s, you think of things maybe with 2 to 3 months or quarters. But I think when you're institution building, you have to think in 5 years. I'd love to say decades, but I think in 3 years and 5 years, because decades are getting irrelevant today.
And your dinner tables are not that quiet. You hosted a deep tech founder dinner at your home recently. The pictures look really cool. I remember seeing the Airbound founder. I'm an investor in that company as well. Naman's a great founder. He's come on the show before as well. But Digi Antra. So you're keeping yourself busy with these young founders as well. Talk to us a little bit about that.
Yeah, I think left brain, right brain, you need to keep both active. So for me, I think just identifying with different people and what they're doing, especially in the fields of space, AI, deep tech, robotics. I think those are the ones where I'm not that deeply involved when I'm looking at education in a different sense. So to me, this is like keeping up with things, but also right through my life, I think my sense has always been one step, trying to be 3 steps ahead. And innovation is something one did in media. I think we're doing that in education. We're counterintuitive. So meeting with counterintuitive people, I think, is very important.
Ronnie, typically when people have like their first taste of public success, there are 2 options. Either they can go on the front foot or the back foot. So when UTV happened for you, how do you make a decision on what you were going to do next?
So I don't know about the front foot or back foot, right? I mean, I think, by the way, serendipity plays a big role. And I know it's an evolved word and people use it a lot, but I think it's quite relevant. So I think firstly, you don't plan some of the situations. I think if somebody asked me when I was in media, would I be doing that for the rest of my life? Yes. Highly impactful, highly innovative, highly creative, highly disruptive, highly scalable. So all of those were very much there. But I think at that trajectory and stage where we had a very good partner, they popped the question, it made complete sense, and then we moved on. But I think that 1 year of separation, when I kind of moved out of not just UTV, but media, was a good thought-provoking year, right? It was a question of me getting into investments and looking at wearing a quasi VC hat on. It was also looking at our not-for-profit and seeing what we wanted to do and scale that up. And I think quickly in the first 3 to 4 months, I realized that I'd love to interact with and invest in companies, but I need to build something back again on my own. Because I think when I started off, and I wanted to be an entrepreneur at a time when it wasn't that respected, my punchline to my parents, which they told me, if things go wrong, we can't help you or bail you out, was I really think I want to implement my own vision. I don't think I'm going to be able to implement somebody else's vision. So when you're a VC, you kind of back people and look at their vision. And I think ironically, many years later, with Bob Iger at Disney, when I was moving out, even though they empowered us to be really a strong entrepreneur here, it was the same question. I just don't see myself building somebody else's brand. Disney's an incredible global brand. I couldn't connect of how I could build that, and it had to be mine. So that context was important. So that's when I decided that I want to start something and do something all over again and build something. And I think both on a not-for-profit business and a for-profit upgrad came about.
And let's talk a little bit about upGrad. Where is that headed? You're seeing a little bit of a consolidation happen. You've touched Unacademy, you've acquired Internshala as well. So what is upGrad covering for everyone in tier 1, 2, 3 cities? There are 170 million working professionals, upskilling, foundational coaching, foundational test prep coaching. It covers a lot now.
Yeah. Firstly, I think consolidation for the sake of consolidation never works, right? So I don't think we're consolidating. I'm not consolidating from a business or an IPO perspective. Because I think the first phase of what happened here overall, and I won't use the word edtech because I think that sector is not how it is rightly defined. But I think the first 5-7 years of this entire sector that needed to disrupt how people were going to learn for the rest of their lives, specialize, generalize, etc., was more what I would call point learning, where either you were in test prep, or you were in K-12, or you were in X, or you were in skilling, or you were in certification, whatever else. So today, to me, the consolidation is the whole food chain, the whole value chain, the whole learner journey. So I don't see it as corporate consolidation. I see it more learner journey consolidation, both on the x-axis and the y-axis. The y-axis being the whole journey, whether from school to college to when you're 45 and 50 and feel you need to be skilled, and the x-axis being all the aspects of whether it's from a pricing point of view, an ambition point of view, a learning point of view, a specialization point of view. So to me, the upGrad axis of X and Y axis is pretty much that, because this is not about selling courses, right? At the end of the day, a learner or a working professional is coming to you because he wants career optionality. He wants to. So for us, we're not here to figure out how to sell a course. We're here to say, how are you going to really be relevant 5 years from now, 10 years from now, 15 years from now, and 20 years from now? When I look at it with that umbrella, then consolidation is a very different one.
And Ronnie, what's happening in education and learning and development is obviously going to happen in other sectors as well. So if at a future point in time, there are acquirers and acquiree who want to learn from Ronnie's experience, trying to bring this market together, what lessons would you share with them?
You're saying specifically in this sector?
Yes.
I didn't quite get it.
Yeah, like from this sector, but general lessons that can be broadly applicable across other sectors as well. The mindset of an acquirer.
Mindset of an acquirer, but just so that I can give you a little bit more of a specific, just if I didn't fully get the context.
Yes, I was saying, so upGrad has become a little bit of an M&A machine in a sense. And so I'm sure you've been presented with deals you've said yes to, you've said deals that you've said no to. And so for people who are eventually, going to be in a position like the people you said yes to and no to, can we have you give them like a window into your thinking?
Yeah. So again, I'd just be repetitive on the fact that firstly, we're not a deal machine under any circumstances. Second, I think consolidation for me is exactly the whole lifetime journey. And that's what I look at. So if that fits in, it's fine. Clinically and technically, when you're acquiring, it needs to be whether it's value augmented in some form or the other. Are you enlarging a particular sector? Are you consolidating a sector? Or are you building strength in another sector? So that will be my second criteria. I think the third one is founders, right? Because when they come in, normally it's very difficult for everyone to feel that I'm going to be here for more than 2 years, but they built their businesses. So most businesses are at a fragile stage where they've got to outlive founders, including upGrad, including many others. So I think judging that element, because it's not yet institutionalized. When you buy market share on something, it's very different. This is still at a very early stage where a lot, whether it's the product or technology, or whether it's the offering, or whether it's the customer obsession, is all built a little bit founder-led. So one has to be a lot more sensitive on that, right?
And you've had a profitable year, but overall for the education sector with an element of tech involved, so edtech naturally becomes the name that is assigned to the sector. Where do you think this sector is headed? Is it expanding? Is it just consolidating right now? Is it going to be flat? Like, what are your expectations for this industry going forward?
So we all have to understand what the sector means, right? Because firstly, education for a lot of people meant school and colleges, It meant graduation, and then for the rest of your life, you're guaranteed a job. And it also meant that this is a not-for-profit sector, because schools and colleges have always been the not-for-profit sector. So if you look at this environment, and then you look at what the challenges are, it's very different from banking or airlines or telecom or some of the other sectors where you're breaking out. So I think the scope for here, if you just look at the NEP or the National Education Policy, for example, where we're at 25% of people who should be in formal learning are in formal learning, 75%. Now, are we going to try to solve for that? That's a massive enough time. But with that, we now need to solve for, are you going to be job ready? So that's the big question, right? Where are the 200 million good jobs going to come from? From where I sit and from where upGrad sits, we're equally worried about the underemployment as much as the unemployed. And the reason I differentiate between the two is unemployed is you don't get a job. Sometimes underemployment is actually more frustrating because you've got a job, but you spend so much time and money and invested into a career, but you're getting paid 1/4 of what you're actually doing, but you've just taken that job. That's actually sometimes even more miserable. So these are some of the questions. So I think at upGrad for us, we look at this as an entire ecosystem that one is trying to build here. Then you look at the TAM, it's much larger, which is we're going to train solopreneurs, we're going to train entrepreneurs. We're going to be people who want to increase their productivity with AI, not get sort of intimidated by it or scared by it, but look at that more as an opportunity. So I think it's not about just being job ready. We want to look at people so that they can be more and more relevant on a basis of every 3 to 5 years. If you look at that sector, then you won't look at it a little bit myopically today as to there are people in test prep, there are people in this, there are people in that, there are people in that. All that ecosystem is going to consolidate. And I repeat again, consolidation is not about companies together. It's about how this ecosystem goes.
Very interesting.
And Ronnie, of course, we're talking in the context of the knowledge economy. If we switch focus to the industrial economy, we, in fact, on the show, we're covering this new scheme from the government called the Bhavya scheme, new manufacturing parks. Everyone knows that's the need of the hour. So far, it's been like the public sector's prerogative, right? ITIs and imparting vocational skills, giving people dexterity, etc. Do you see an opportunity for the private sector to step up and get people job ready, like on the shop floor?
Yes, but I think today the reason why Apple is using, for example, this India as a country where we can do that, a lot of electronics. So a lot of what would have been for the prerogative of a Korea or Taiwan is moving to India. Having said that, it's come with an extremely captive training base. I think the earlier stories were, Maruti Suzuki, right? But if it wasn't for Suzuki, we wouldn't have a Maruti. And if we wouldn't have had that, they wouldn't have had 50% of the market share of automobiles still in India. So imagine a company 40 years back, still relevant because they put training and focus and captive it there. And they still have 50% of a massive market like India because they're diversified in that. So is there scope in buckets and in particular areas? Yes. Is our mindset that global thinking in terms of production? I think it needs to be dragged in that direction because we haven't had that comparative enough training to set up benchmarks that high. A little bit of that Chalta Hai approach is very high. A little bit of the entitlement approach is even higher. I've done my college, I've done my this, where's my job? So I think if you take that off the table, there are, I wouldn't say just green shoots on that, but there are places in which we've done that. But I don't think yet we can we can talk about the prowess of what Vietnam, of what maybe a Korea and Taiwan do on one side, and obviously China does on the side.
And India's doing a lot, like India's Semiconductor Mission 2.0 and many other initiatives. But where is India's place in this world of AI? And how should talent think about it? How should companies position themselves to be global leaders in offerings? Because there is a narrative going around that the Indian IT sector, of course, the stocks have taken a hit because of everything that's happening in the world of AI coding and all these LLM models enabling work to be done by agents and stuff. So how is India going to position themselves? How does an Indian talent get ready for what's coming?
So I would say that's two parts, right? One is a government statement and the positioning of India in the pecking order of are we going to be in the top 5 nations? Like we are in space. In space today, we're in the top 5 nations of the world. So if you look at that, and there's a lot of AI that goes into that, but we don't talk about that much. In some of the other sectors of deep tech and space, we are in the top 5 reckoning of countries. that'll give you an indication that if you zero in on something, that'll happen. So one is from the government point of view. The other one is how is the workforce going to do that? So, I mean, there is a fair bit of narrative. I don't think we always need to equate it firstly with IT companies, because for multiple reasons, they were an arbitrage model, very, very incredibly efficient one, but it was an arbitrage model. But as you know, Sunil Mittal maybe 2 weeks back said, the IT companies spend a lot of time doing buybacks of their own shares rather than investing into the future. So I don't think that's the benchmark of what you would look at for AI. So my simple answer would be, from a working community, people need to harness it because it's going to augment things. From a government perspective and positioning, we'll have to walk the talk a lot more. Is there a lot of opportunity here? Yes. Is there more opportunity that global mobility of talent will happen? And a lot of people trained from here may need to go to other places? Yes, because this is not the hub and spoke of it. But I think in some sectors like robotics, drone, space, in AI, we can actually see the march because we've actually got a head start. And I think we'll have to look at it like that one. From a general workforce, we'll have to all adopt it because we don't have a choice.
Ronnie, you've done so many ventures of your own, and I'm assuming you get pitched, I'm sure, in fact, you get pitched many, many ventures day in and out. We're talking about AI. One of the other things AI is doing is every morning you wake up and it's solved more problems. Either it's drug discovery or something. And so
I'll tell you one thing, but it also creates a problem.
Yeah.
Is getting AI pitches generated by ChatGPT and Claude. You can see that now. You can see a reply, you can see a pitch, and I think I pressed the delete button faster than anything else, because if that's how you think you're going to be an entrepreneur, forget it.
Yeah. Which actually brings me to my question, which is, if problem solving is getting somewhat commoditized with AI, maybe problem finding is what we need to spend a little more time on. And so, with your many, many years of experience, what can you share with us about picking the right problems to solve?
But you need to be motivated. You need to be inspired. You have to learn from your own mistakes. Problem solving is not solved necessarily by some data and analytics. It definitely is an incredible prompt sheet. But I can tell you today, whether we want it or not, your best learning is going to come from your failures. You'll have to fail. As a manager, it's important that I let people to be able to do that and go forward. So I think those are not going to come from these lessons that you're going to do that, just the data and the prompt sheet of what we would call it. This is not to undermine it, but there are incredible amount of things that I think are just going to be very much there and has to be part of the DNA. And the people who mix and match and accept that are going to do much better than the people who think this is a quick fix.
Can I ask you a question about failure from the movies business? Because, to us as the audience, it seems like every new movie is like a fresh roll of a dice. So as tech entrepreneurs, what can we learn from people in the movies business about bouncing back from, one or two or a string of failures?
Well, I mean, my ratio of success to failures in everything that I've done in life is 8 failures to 2 successes. But that's my formula. That means I'm a little bit more risk-taking, because the failures will have a binary output of -1x. But because I'm a risk taker, my upsides have got multiple x's. So the probability that the two that really work much bigger than if I was a little bit more hedgy, that would kind of work. And I think that's how it works. Coming back specifically to movies, I think there is a sort of over-dramatization because everyone looks at the weekend box office and forms a jury. Before that, it used to be 10 critics who didn't really have much to view, never made a movie in their lives, so were critiques, and that would base that. So I would say creativity is the core of creating something out of nothing. But it's a very powerful storytelling. So if I made a movie called Swades, it didn't do well at the box office at that day. But till today, 20 years later, I've still got enough people catching hold and say, I came back to India because I saw your movie Swades. And it's still evergreen on OTT platforms. So I think storytelling remains evergreen. The platforms have changed it. The box office has changed it. So it's not as binary. The same would apply to companies. The problem is that we press the button on saying, this is what I need to do. And the first 2 failures, most people walk away. The first time you run out of funding, you walk away. The real challenge is when you run out of funding 4 times and you're still in business. So the binary input is self-created because 90% of the time you don't want to stay the course. In the movie business, building a slate is part of a successful formula, which means like a VC formula, if I was doing it with a business and with what we did, we would have to have 9 or 12 movies. The 3 would do very well. 3 or 4 would recover their money. 4 would be box office flops, but have a good lifetime outside of that on television and on OTT and many others. And I think the real world of entrepreneurship is in that same manner. Stick it out.
I'm going to draw some connect the dots thing here, because you've now started investing in deep tech, and with RSVP, you're producing some of the most distinctive movies. So you're trying to be ahead of your time, basically. You said 3-4 steps always ahead. That's Ronnie Screwvala for you. Is it true that you are risk-taking even in your movies slightly more than, say, even your deep tech bets?
See, when you're deciding, then you're not deciding on the basis that this is a big risk or this is a gamble. When you go into a casino, you know the odds are whatever they are. So at the time at which I've got a self-conviction that this is a story I would like to tell, and I greenlight a movie, I'm not looking at it as, oh, it's risk-taking and there's a binary output. I'm looking at it that this is the conviction and we have to make it work. And I think that's the best way you can get into a venture. You can't get into the venture with always looking for the exit sign. Because if you are, the probability of you moving towards the exit and gravitating towards that is going to be very high. So I don't look at it in that context of every decision that one taking is a risk. The risk is there ingrained in anything else. But your self-conviction can propel a lot to make it successful.
Ronnie, I think we're getting so many lessons out of you. I'd love to ask you, like, what's your process for crystallizing these lessons? Do you write them down? I know you've written 2 books. Do you share them with young people? Do you reflect a lot?
See, I think I think mentorship is overrated. Like passion, everyone says that passion, I'm passionate. I think that's overrated.
You finally started doing less of that, by the way. You don't hear that word as often as you used to, like 3 or 4 years ago. Yeah.
Yes, because I think so. To me, I'm not someone who's saying I've got it here. This is my experience. It may not be somebody else's experience. Each one has to do that. So if I was to answer a question which somebody had, I'd first only part with lessons based on that, and second, I'd put a context to that by spending a little bit more time of why I thought at that particular point in time that would be relevant to me, but today it may not be. Because I think this context that, look, this is what I did and this is how it gets done, and this is how I did when I was young and when I was middle-aged, whatever else, is totally relevant today. Totally relevant for the next generation and for what business, personal ambitions, everything that has to be done today. So it has to be contextualized. But am I documenting it? I don't think so. I'm not. I mean, we're having this conversation, so I think
we're doing it on your behalf.
It sparks a few things. You're doing a little bit of acupuncture. My nerves are responding, and I'm telling you what I think, what comes up right now based on your acupuncture questions. But the severe your acupuncture questions, maybe the more relevant my answer.
And let's stay with your investing for a bit more. So you did well with Lenskart at Unilaser. And now with the 50 million deep tech fund, you're investing heavily into deep tech companies. I think you want to go more concentrated, 15 companies, $1 to $3 million checks. And Digiyantra is one of the companies which I think you've doubled down on with Reliance. Digantra, sorry, my bad.
Yeah,
and I mean, that's a fascinating company. Talk to us about the tech there. What excited you about that investment?
So I think space, as I said, really, it is forget the fact that, in Star Wars, they say it's the next frontier, but I think India is well positioned there. The lower orbit space has now become not a sort of a government proprietorship around the world. And a little bit thanks to Elon Musk and Starlink, because if there are 15,000 satellites in lower orbit, 13,000 belong to Starlink. But today you've got a situation where you're launching rockets to let smaller satellites go in there. The whole price context is going there. The life of a satellite is becoming shorter. There's debris in inner space. There's debris in lower space. There needs to be refueling. Espionage is at a much higher level. Your ability to track anything and everything that's going on Earth. So between the politics, the espionage, the technology, the ability to do that, It's a fascinating world out there, and I think if you can find people with that wire to make a difference and an impact there, it's huge.
And you also made a statement where you said that Indian deep tech is patronized by Indian capital. Is that correct?
I would say yes, because Silicon Valley feels nobody else can do it outside of them, and so they want to self-fund themselves, which is bully for them and great for that. But I think it's good that it is happening from within Indian capital to quite an extent right now.
Speaking of Silicon Valley, Ronnie, there was we saw something on Twitter, now X, recently. Unfortunately, we don't have a copy of it to show on a screen just yet. But it basically said that the year Stripe was founded, payments was not the coolest theme in the year. The year Anduril was founded, again, defense hardware was not the. Well, so where I'm going with this is, how have you come to sort of develop a nose for what's around the corner? Because everyone knows what's, what the hype cycle is, what's consensus right now, but that's not where investment alpha lies. So,
yeah, consensus is herd mentality in a nutshell. Consensus is herd mentality, and there's a fair bit of that. Yeah, I think it's a combination of a few people who want to be counterintuitive. I think the real entrepreneurs, and when everyone says it's really lonely at the top, when it really gets lonely, what are you doing actually? You are not, because when you want to stay the course, and if I were to give a punchline to entrepreneurs today, it would be the first thing. If I was in my 30 years of experience, it would be the negativity that comes your way. And I don't mean negativity in a bad manner. Just that constantly everyone will not look at you with that sense. There'll be a lot more naysayers. So I think that you want to look around the curve. You'll have to not listen to naysayers. You'll have to actually figure out your own beam and your own headlight to be able to look around the curve. And I think for that you need to be counterintuitive. But trust me, when you are, and you have that gumption and you have that conviction, and then your wiring becomes different, and then you can innovate much better.
Where does Ronnie Screwvala go for new ideas?
Walk on the beach, talking to an incredible amount of young people, making the investments and having that. A little bit like the dinner that I had at my place that you referred to a little earlier. Yeah. But I think, or frankly, in a shower. So I go have a shower.
There's a tweet that I read that if
also
you're not...
find today, I found having a power nap between 2 and 4 p.m. Sparks a lot of good ideas.
Do you follow any of the health and longevity stuff that Brian Johnson has been talking about? Are you excited about that space in general?
No, I don't think there's anything wrong with it. I'm not being judgmental, but I'm just saying, I don't follow that. I think the artificialness of this, I'm a little worried about. I think I managed fine on my own, and my Parsi genes have helped. So I'm staying with that.
There's a tweet that I read very long back. I think a famous person wrote this, that if you're not thinking about it in the shower, then you're not obsessed with it, basically. But what does 2029 look for you? 3 years from now, there's so much happening in your life. Deep tech investments, you're making movies, you're running upGrad, you're scaling upGrad. There's so much happening. So the Age Foundation as well. I think we should talk about that also. But 2029, what does it look like for Ronnie Screwvala?
So I think goalposts move, right, from time to time. But I think today, as I said, institution building when it comes to upGrad, for me, it's a very complex problem that we're trying to solve. Not just, and I don't want to say only upGrad solving it. I'm hoping that another 50 such organizations help solve it. It's not the government's problem to solve. I think their role is to be a great catalyst in many ways and then open up the sector. So I think from the whole skilling, learning, education part of it, yeah, that's a serious commitment that I've made for better or for worse. One is to see through. I think for Swadesh, for me, is a little bit on the Viksit Bharat goal, right? I can see it from the lens very differently, which is that we're not going to be able to be a modern nation in 2047 if we don't solve a little bit for what the other 600 million people who we don't really count too much in our day-to-day lives is going to solve. Because we're not going to be able to do it just with GDP like America. We're not going to be able to do it by China. We'll have to do it our own way. So to me, Swadesh is a very strong link and a balancer for where one can connect with the real India for us to be able to figure out what we need to all do. I think the fun part, obviously, as a hobby is storytelling. It's very powerful. It keeps your creative juices going in a very different manner. And I think the VC part is less about money and funding. And I don't want to sound facetious because everyone will say, what do you mean? Once you have money, you can say it's less about money. I don't mean it in that manner. What I meant was, if I wanted to be a VC person, then I'll have to start doing a fund. But I'm doing it out of my own personal interest with my own funding, which is what I'm doing with storytelling and movies also, right? And the reason I say that is, when it's your own money, you can say no 99 times and yes only once. When you're doing it on a treadmill and a business, you may need to do some things you have to do, some things you want to do, and some things you just have to make a choice based on business. So I think that's the less onerous part for me outside of upGrad, which is onerous, Swadesh, which is onerous because it's got a heavy sense of accountability of what we want to achieve. And the movie part of it, the storytelling part of it, the VC part of it is very optional, but very rejuvenating.
But tell us maybe a little bit about Swadesh Foundation, like some of the recent projects that you've done there.
So for us, the project is not projects, right? I mean, I think we basically take a large geography. I think we're a unique model because as entrepreneurs, both my wife Zarina and I have focused on the fact that we want to be an execution foundation. So at first, the idea is to understand the problems and solve them. Second, we think the whole problem of solving in rural India is a holistic one. Third, we have to eradicate mental poverty before we can change physical poverty in many senses. So how do we raise aspiration levels for people who don't have an earning member? Some of them are migrated, may not have the basic infrastructure, and don't think they can make it in life. So if you look at some of those problems, I think there's so much to be done there. But the soft aspects of that are as important as the hard aspects. So I think that's something that is a continuous process.
Ronnie, I do have one final question for you, for young people mostly. I think the future of work is changing very, very rapidly. And, one can't really see people having this one long, continuous sort of career, being at the same org or the same company for their entire lifetime. So what lessons can we actually draw from the lives of creatives, entertainers, where they don't think of their life as one long arc, right? It's mostly a body of work where they've done projects.
Yeah, I would just say two things here. And I've said this a little bit more, and maybe it's misunderstood, but I'm saying, yes, you should have more than one interest and job in life. And people look a little, but I'm doing 13 hours of job and one job. What do you mean I go get another job? I guess what I meant was, anyway, today, there is no job guarantee.
Yeah.
And therefore, the more you can fixate with the passion project and make it part of your optional work life, it will balance you off. Second, if I was an employer, I would encourage that because I think the productivity and the element of fun and the element of inspired people and the people who are happy workers will be ones who have a better balance than this constant frustration of whatever else. So that's how I would kind of view the ability for just that next level of where people need to go.
And Ronnie, what's that one story that you're most excited to tell in the next year or so through your movies?
I still have to read some, actually. I have to say in the last 1 to 1.5 years, I've lost touch with what audiences are looking at. I think there's so much of good writing that's happening on multiple platforms. But today, I think people are falling in love with characters even as much as they're falling in love with stories. So I think that's where I want to spend a little bit more time on.
We're going to ask you a question knowing fully well you might shoot it down, but say 50 years out, if someone's making a biopic on your life, what would you like it to be called?
Ooh.
What would I like it to be called? Firstly, I would leave it down and say, don't waste your time on that. Because if you're asking me, with my context of hits and flop ratios, this will be more a flop than a hit. It would be my first piece of advice from that point of view. But I think, it's almost like asking me, so how would I like to be remembered? And I'm saying, actually, it's not relevant what comes on a tombstone. I think today, I'd like to just live life on my own terms, and that's what I think I'm doing. So if somebody's got to say, live life on my own terms, I think that's good enough. It won't make a great catchy title. We'll have to find a Hindi translation for it, but otherwise, that's what I would say.
But we love it.
And Ronnie, I don't think it'll be a flop. I think it'll be a hit. And you've inspired so many around you, and you're doing tremendous work with Swadesh, with your fund, with with the investments that you make and with upGrad as well. So kudos to you, and thank you so much for coming on our show.
No, thank you. Thanks for some really good interaction between us. Thank you.
Thank you.
Pleasure. And congrats on the 100th episode.
Thank you very, very much.
All right, listeners, we're moving on to our next guest. We've got Vaibhav of Shadowfax with us. Vaibhav, welcome to our 100th live stream.
Hey, Utsav. Hey, Dhruv. Thank you so much. And thanks, Ronnie.
Whenever somebody takes a company for an IPO, whenever I get a chance to interact with a founder who's taken a company to the public markets, and my favorite question to ask them is, how did it feel the night before? What was going through your head?
A lot of emotions. Obviously, we did get a sleep. And when we listed, so normally it's a big affair for your families as well. So all our close relatives, friends, families were also there. So there were a lot of goosebumps. But yeah, I think we just went with the flow. There are just too many things that you need to do while you are listing. So in the end, you just feel happy that you got listed.
But does life really change after listing? Like quarter to quarter, pressure targets, all of those noise online about the stock market tickers and stuff, like does it affect the team morale and stuff? Or have you seen that it's not really that much of a difference?
So initially, yes. I think when we got listed, we actually went below our IPO price as well. And we felt that we had priced our IPO appropriately as well. So there were a lot of jitters, there were a lot of confusion on why people are not buying on our story. Did we do anything wrong out there? We honestly consulted a lot of our good friends and well-wishers, and they just advised that keep doing what you are doing. Once people gain confidence on your numbers, I think all of these things will start falling in place well. So that is what we did. We had a leadership meeting as well, and we just wrote down our focus areas, and then back to drawing board on executing it again and again.
And I mean, e-commerce set this expectation over 10 years, where it said that one day delivery is going to be the norm. But now what quick commerce has done in the last 2-3 years, I think they've made 10-20 minutes as the new norm. And that's happened at a very fast pace. So logistics in itself is changing. How do you think you're positioned to do this well?
It's a interesting time to be in logistics space, to be honest. See, if you look at maybe every 3 years, we are coming up with a new model of e-commerce in India. So Meesho, for example, which revolutionized the value commerce aspect, that's also a recent phenomena. The quick commerce was nothing maybe 3.5 years back as well. And even in the first year itself, it was facing a lot of backlash that who would want such a service as well. So that's the beauty, I would say, of the sector right now. Now it's quite exciting to solve some of these difficult problems and go into depth of it, and especially work at a good scale from that aspect. Now, with respect to Shadowfax, our motto or our thought process has always been that if there is a new model that customers love, if there is a model which brings more people into digital commerce, we will be the first one to crack it from a logistics standpoint. And that is what keeps us restless. That is what keeps us on our toes. That how do we innovate? See, either you could innovate I mean, the innovation for a value commerce is slightly different from that of a quick commerce person. And that's something that the team here at Shadowfax is constantly working and innovating in that direction there.
Vaibhav, do you think we can dial the clock back a little bit and try and understand from you? I mean, so, quick commerce makes it appear like 10-minute deliveries, we just will them into existence. But no, they're possible because there were these fundamental building blocks that, players like yourself laid over many, many years and some core innovations along the way. And we'd love for you to tell us like a historical sort of outlay of what makes quick com possible today.
So again, see, the first and the foremost thing for quick commerce is getting the inventory closer to the customer. That is the number one thing. In earlier days, when the quick commerce fad wasn't there, it used to be recommendation engines, which used to identify that people in this particular pin code would want these many products of this particular type. And people like Amazon, for example, they have actually written a blog around it. They, even without customers placing the order, they used to ship those orders closer to the warehouse. So that the next time when you open your app and see, you could actually see that if you place the order within next 10 minutes, you will get it in the same day itself. So that's the first philosophy around it. How do you get the correct inventory at the right location? And a lot of work that has happened on the recommendation engines on how do you know that in which area, which set of people would want to order which item of which brand. See, in just taking an example of quick commerce, it's not simple that I just have to stock tur dal. I have to know that which brand do I need to stock in. Do I stock how many packages of 500 gram or how many packages of 1 kgs? And all this is underlying, there's a lot of recommendation and AI that is running at a localized manner out there. From a logistics standpoint, it is immense. See, when we started Shadowfax and dialing the clock back, at that point in time, there was no geo. I do remember we had to pay our delivery partners 400 odd rupees to take a mobile plan which gives them 1 GB a month. So in those areas, in order to have that location stack, because when you are placing an order with e-commerce, the important thing is ETA. You need to know that if I place an order, how much time will it take for the order to deliver? And ETA, you can only forecast if you have humongous amount of data that is there. You need to know the localized patterns. You need to know how much time will it, and the travel time that will take, but it will also, you need to take into account how much time will it take for the last 100 meters. So see, Google Maps can give you, for example, from point A to point B, but there is no map that is there which can give you that in a particular society where is tower E.
And one would imagine that even the bottlenecks, the weakest links have changed over time. So you're saying right now it's the last 100 meters. We've literally brought it down to just that.
Yeah, I mean, that's exactly the thing. I mean, when we started, there was no live tracking, for example, for any of the thing that we had. Now, live tracking is like bare minimum. I mean, people do not see you as a tech firm if you're not giving live tracking, for example. So from those era where there was no live tracking, from those era where there was no location map that was existing, even for the smaller granularities that were there, to a time where we are now discussing how do we solve the last 100 meters. That's the evolution that the scenario has come in. And a large part of it is also on the front that, I mean, your allocation engines, for example. See, quick commerce is a highly repeatable scenario. And when you have repeatability, your allocation engines also need to take into account the familiarity aspect as well. And those algorithms actually give you leverage on small parameters as you scale. And that's something that I mean, we are also excited about in doubling down on how to maybe make them more intelligent.
And you also related, but
sorry, Dhruv.
The related question, like, with respect to demand fluctuation, I'm assuming it was very different for e-com because you could see it coming, right? Diwali is going to happen, or this sale or that sale. But how does demand fluctuation work in a quick commerce setting? And how do you create a system that's elastic enough to be able to surge and then, sort of flatline?
Yeah. So, and that's a beautiful question. And so in the earlier days when we were starting, at that point in time, e-commerce was there. Your regular typical e-commerce, 4-5 days of delivery of shipment that would be happening. When you have that much SLA, you can still work with non-automated systems. When you are working with smaller SLAs, so we started as a hyperlocal company, and our hypothesis was clear that if you can deliver food to a hungry person in 30 minutes, you can actually deliver a lot of things. So when we started building that, so our entire philosophy was that all these decision making need to be automated. So I mean, that was coincidence. So at that point in time, when I was starting, I was working with a hedge fund, US based hedge fund, and I used to design algorithms on how do you trade on stocks at a high frequency. And similar philosophies kind of apply here. You have so many different parameters. You have demand going up and going down at different levels. You have your supply, which is also variable. How do you match both of them? And just building that underlying infrastructure, those algorithms, that is what has actually made all these decision making possible. You just cannot run a quick commerce setup manually. You need these fundamental building blocks.
And staying with that data and optimization for a bit, you built your own maps as well, over 1 billion deliveries. Your routing engine has been trained over 1 billion deliveries. So how does that give you a competitive advantage? And talk to us a little bit about how that competitive advantage keeps on becoming a defensible moat for you.
Fair. See, if you look at Indian addresses, and a simple test that I often do, or some of us we often do, we just go to Google and search our hometown addresses, and we still do not get the exact pinpoint location on the map. Now, in India, the problem statements are much more diverse. I mean, why we are not able to get the exact location? Because let's say our addresses are written in English, but they are actually in our home languages. So somebody like Vikas as VIKS, somebody would write at BIKS as well. So we homophonically translate it depending on our sense. Then there is no standardized sequence as well. Your locality can come up front. Somebody would write the landmark up front. And in some cases, the landmark would also be a reference. Ki Ramu Pan wale ke paas wali dukaan.
Yeah.
So in those cases, see, you need to identify what is the exact lat long of an order. Because whatever route optimization algorithms that you build, you run, you actually need a lat long. Your system cannot understand an abstract address. You need the lat long to be there. And that is what we started with in building SF maps. So in SF maps, what we have done, that historical data where we have delivered to all the customers, all the delivery partner locations that are there, we have tried to map it with the way Indians write their address, with the way Indians annotate their references. And we have built this graph, which is entirely built on the local data set that is there. Now, from a scale standpoint, see, this is an interesting observation. So roughly 8 to 10% of Indians, they do not know their exact PIN code. And the entire e-commerce parcel system that runs on PIN code only. So if your PIN code is incorrect, then 8 to 10% chances you will land up in a different hub or a different area from which this order cannot be delivered. And then you have to reroute it to the correct hub and then deliver it there. 2 to 3 days are already lost in that. So if you
Is
do
this
not
something you're solving with SF Shield?
So this is something that we are solving with SF maps.
Okay.
So now my shipment actually reaches whatever the PIN code the customer has given, the shipment reaches the exact hub where it is the closest to be delivered from the customer. Prior to this, our misroutes used to be in the tune of 7-8%. After this, our misroutes are now in the tune of 1.25%. So, and each misroute helps you reduce your cost. It also improves the speed at which the customer gets the package.
And what is SF Shield?
So SF Shield is the code name for our fraud detection and intelligence platform, basically. So see, when you are working at such high scale and there are so many stakeholders that are there, your delivery partner is there, your seller is there, your customer is there, at a different levels, there are chances of gaps that could come in. How do you identify those gaps and correct it? So I'll give you one example. So one of the primary offering for us in the market is reverse logistics. So let's say you ordered a t-shirt or a shirt, you didn't like the fit and you would like to return it back. Now at the doorstep, the delivery boy actually needs to do a quality check, whether the correct item is actually being returned by the customer or not. Now, the problem with Okay, now our offering to the market is that for the brands, we say that we will ask you for a premium for every doorstep quality check. But if at any point in time, it is that if we have picked an incorrect product, we bear the entire debit of that order. So we basically underwrite that product. So if our engine is saying that yes, a correct item is being picked up and an incorrect item is delivered to you, you will get the full amount back to you. So we have built, we have recently actually launched large language model on top of it, where the delivery boy just have to click an image and the model is able to identify if it is the correct product, correct brand, correct size, etc. And consider it from a perspective when you are comparing the images, the model who is wearing the image is actually wearing a entire t-shirt, but when we are returning it in a folded manner. The engine is so strong that it is able to identify the patterns even within a folded ecosystem. So that's that again. As I mentioned, the cost of doing or picking up a wrong product contributes to our losses, and that's why any improvement that we do increases our profitability noticeably.
So there were two questions. One, Shadowfax has clearly solved a lot of problems along the way in-house, but do you guys also have a corp dev team that's always on the lookout for other smart teams, small young teams that are solving problems that you haven't yet?
Absolutely. So we do not have a formalized structure per se, but we are happy to engage with a lot of companies who are solving a lot of deep tech problems in this space. So be it on smart locks, be it on automated sorters that are there, or be it on, so these are more towards the combination of hardware and software. So those are the areas where we are actually actively focusing.
And the second question, Vaibhav, was just generally as a logistics leader. So we've spoken a lot about private innovation, but logistics can't exist in a vacuum. Like roads, rail, air, all of those are public goods. Do you want to say something about like state-led, government-led, sort of physical infra initiatives that have changed the game for logistics?
Absolutely. I think the work the ministers, they have done from a road connectivity is commendable. I think the travel time and the tonnage that can pass through in the requisite SLAs that have improved massively for us from a time that we started. And as a country, if we would want to go into a zone where our cost of logistics moves down, such building blocks are a massive help for us. Another area, actually, I missed one of the area where we engage with a lot of new companies is on the EV space. That's also an interesting space that we as a team are exploring.
And is that to bring unit economics more favorable? EVs reducing the cost and carbon footprint also?
Yes. So I think it's a win-win scenario on both fronts. You do get benefit on the carbon footprint. At the same time, from a cost standpoint or from the use case standpoint, it's actually a massive unlock. So when you look at quick commerce, for example, your travel distances are not that high, and your speeds are roughly similar, whether you drive an EV or whether you drive a bike. In those cases, using an EV actually helps you with optimizing on the cost. Also, at the same time, it makes it much more easier to tap onto a larger supply base. So the good thing that has happened in the EV ecosystem is the financing model that has come up well. So it is much more easier for a gig worker to take a daily or a weekly rent of EVs and work with us and other players in the market to deliver shipments and make money out there.
Vaibhav, do you find time to... sorry, what's up?
Given your vantage point in the 3PL logistics space as well, third-party logistics space, what are the top two challenges that you're seeing the industry is facing right now?
See, I think number one, I would say is how can more digital penetration increase for a country like India? If you compare it with some of the mature countries, we are still lagging massively. We are still in single digits, whereas even our Southeast Asian neighbors are on the higher side as well. So that is increasing. How do we get more and more customers purchasing online? Is a major unlock for everyone, and that will I mean it will work at multiple levels, and we also would want to participate in that journey, whether it is on the value side of it, or whether it is speed side of it, velocity side, or whether it is versatility perspective as well. So that's one angle that is there. Second, I would say, see, I think from a third-party logistics ecosystem, one often thing that people keep debating on is how much would the right insourcing happen, or what would be the right outsourcing will happen by bigger players that are there. Now, see, on that end, because that, I mean, on that end, the core philosophy is, as a country, we need good capacity to be created, and that capacity creation is the most important thing that can be done. So the amount of commerce that is still not reachable in the right manner is humongous. And if the right capacity levels can be created, that capex cycle, that investment cycle, all these things will definitely help both PPL as well as our clients as well, who will be able to get in more users.
So far, Vaibhav, we've only been asking you very, very serious questions. So I will. There's this FedEx story, right, of Fred Smith once actually. So I don't know if you know this story, but FedEx at one point came down to its last $2,000, and Fred Smith, the founder, took that money to Vegas.
Vegas.
And we're not saying you're no gambler, but you've been you've been a high frequency trader, etc. Any such fun stories from Shadowfax's early days, etc., that people haven't heard before that you'd like to share with us?
So, are you aware Shadowfax is named after Lord of the Rings character?
Yes.
No, I had no idea.
So Shadowfax is Gandalf's horse.
Gandalf, yeah.
Yeah. So if you've seen the movie, there was a dialogue, "Come on, Shadowfax, show us the meaning of haste," when Gandalf the White was there.
Yeah.
The interesting part is all our servers, all our databases, all our services, they are named after Lord of the Rings characters.
Oh, wow.
And who amongst the founders? All of you big fans, Lord of the Rings?
Yes, all of us big fans. We actually, so the initial team was bigger fan, I would say. The founding team was bigger fan. So every time when we used to launch a new service, we used to all sit together and discuss what should the name be. So you'll have Frodo, Rivendell, Erendel, Gimli, everything in our horizon here. And these names are done in a sense that so the role that Sauron would play in LOTR, the similar thing that application would play in our infrastructure as well.
And Vaibhav, do you find the time to just take a break from the here and now, sometimes travel the world, go to logistics hubs, and to just see what the future is, like what China is doing with embodied AI, or autonomous deliveries happening in the US or elsewhere? What can you share with us that we don't ordinarily come across on an everyday basis?
See, two interesting things. One, I wish to travel. I love to travel, though I don't want to visit hubs when I travel. But
vacation, basically, where you work for 2 days and then take a break for 2 days.
Right. So yeah, I mean, so I've visited an Amazon facility in LA, and visited China facilities as well. In fact, Abhishek also visited the Korean logistics, Korean facilities as well. So the clear signal is the amount of capex or the amount of automation that these guys have done in their warehousing tech is massive. And they have been very innovative and frugal as well in designing those solutions. So one example that we took in, so earlier your entire conveyor belt had to be established in one single unit in the warehouse. What some of the players have done is they have built Lego blocks of those sorters, such that they are not fully automatic, they are semi-automatic, but they are Lego blocks. So you do not need a big space. You just need a small space and you can stack. So if you want 4:1, you have one machine there. But if you want 8:1, then you can combine the two machines.
Modular and
Yeah, modular. So they
yeah.
have actually made it very modular. So that's a very local innovation because, I mean, then it makes it easier if
Like
you are operating in a lower scale.
simple stuff works
Yeah.
in logistics, right? If it weren't for the container, there would be no trade. So
Exactly.
yeah.
Exactly. And
Out of
even if we
curiosity, are
talk
you
about
an operation?
containers, there's lots of depth in how to design the container, how do you fill that container, how do you load that container into the respective vehicles, for example. Sorry, you were saying.
No, I was
Scalable.
just curious if you were ever, like, as a student, a fan of operations research, because that is your life.
Yeah, I mean, I in general like solving problems. I mean, the way they, and maybe more inclination is towards solving problem in human intersection. And that is something what Shadowfax is more. It's not about writing a code or writing an algorithm that will work. So one of the learning was ki we wrote a route optimization. We told our delivery boys, please follow it. Then they came and told us, "Yaar, you are missing important factors in this." So, for example, when we book an auto late in the night, they reject us saying, "Yaar, wo mere ghar ke paas nahi hai." So, riders, they also want, "Yaar, if you can give me the last order of the day, which takes me closer to my home, I'll be more sticky with you, even though it may not be the most optimum route." So,
And
yeah.
no,
These are
please.
the things which, so when your technology has to marry the human power, that is where the real magic comes in. So a lot of times earlier we used to be very naive and say, okay, I mean, we have written the code or we have built the tech, but it is not being adopted. And then when we visited ground, then we talked to riders, we even do deliveries on our own as well. So the top leadership once a quarter, we actually go out on ground, do deliveries, meet customers, meet riders as well as a part of a mandatory thing. A lot of us, we do it more frequently as well. But when we went on ground, we realized that yes, it is not only about these theoretical algorithms that the entire journey is.
And as a final closing question, Vaibhav, in 2025, I think you made a statement about agentic commerce becoming a reality very soon, where agents are going to do most of the shopping for us. So what does that future hold? Are we going to be expecting Shadowfax to get into drone deliveries? What does the world of logistics and deliveries look like maybe 3-4 years down the line, given the
I'm
future coming
decently
up?
bullish. Yeah, I'm decently bullish on agentic commerce, or agents taking over a lot of things from us. Because see, these agents will be super personalized. They would know what, when, where do I order, or what is my preference, and the underlying systems will also be more agile to understand those agents there. So for Shadowfax, leveraging the agentic ecosystem is one of the topmost priority for us. We are extremely bullish on the kind of activities. See, logistics is requires a lot of human, historically has required a lot of human in order to execute a lot of repetitive tasks. And some of these tasks, we now have the power and the technology in place, which can be automated, which can be executed by an agent, which gives you both scalability and reliability. And that is where we are bullish on. We do look forward to autonomous drones as well. Again, see, the current thought process is that they can work very well from a middle mile ecosystem. So let's say if you are fulfilling your dark store from your outside the city warehouse, where both the units or both the ecosystems are owned by or are governed by a single entity, that is where things can be very can be hugely helpful from a drone setup. So your fulfillment rates actually become much faster. From a last mile standpoint, or whether the end customer will start getting drones, I mean, orders via drones, I do not see that in the next 3 to 4 years, or maybe even later. There are a lot of challenges in that space, and yeah.
All right, Vaibhav, thank you for coming on our show. This is special for us. Really
Thank you
appreciate it.
so Thank
Thank
you
you so
so
much for your
much.
time.
And congratulations for your 100. And yeah,
Thank you.
look forward. Thank you.
Thank you. All right, listeners. So now we will move on to our final guest segment, India's first unicorn. Two co-founders are with us. What a fitting end to this special live stream episode 100 that we'll do. So first, let's welcome Mohit and Abhay of InMobi. Guys, welcome to the show.
Welcome to the show.
Thank you very much. Thank you for having us with you guys.
This is special, so thank you for your time. And let's dial back, history time. So Naveen and you guys were at dinner, and that's the origination of InMobi as a company. You've done this for almost 2 decades. Does InMobi still feel like a startup to you?
Oh, absolutely. It is a fantastic startup. I feel we've been reinventing ourselves at every stage. And this time is just fabulous. Isn't it a great time to be uh, doing a startup at scale at which InMobi is running?
And the first unicorn tag of India, was it a burden or was it a boost?
I think it was a pretty big pat on the back. Look, when you start a company, you never start a company thinking that you will become the unicorn, let alone the first unicorn. So when that happened, that was like, we've arrived. Little did we know that, when you get a tag like that, it's only the beginning of a very interesting journey, a journey that you never want to finish, a journey that you never want to stop, a journey that has its own ups and downs, and that's interesting. So I think that tag or that achievement just probably gave us the ticket to a ride that has probably never going to stop.
Abhay, Mohit, I'm curious, like Abhay said, you've constantly reinvented the company, but what have been those key pivotal moments, both in the ad tech category, but also the technology industry, that have created opportunities for you to reinvent along the way?
Look, I think, I'll just start with the previous question that you asked also. When we were starting this company, one thing we were very clear, all four of us, that, we want to build a global company from this part of the world. And when you have that kind of ambition, I think time as a quantity stop coming in your way. So for example, I think for me, in engineering, you say it's a roll forward release. You only roll forward. There is no backup, or you don't come back. And I think that's how we see our journey. And this question get asked quite a lot these days. You have been over here for 80, 90 years. How is it? I said, look, we are just starting. If you look at Tata, Ambani's, or even Google or Microsoft, I think Bill Gates, he's still there. So I think when you build those kind of organization and you have that kind of vision in your head, I think 20 year is a very short period of time. In Japanese, they say the company generally have a 300 to 400 years of span. So, we are still very young.
To them, a quarter is 25 years to the Japanese.
Exactly. So, and then the other part is, I think one thing was very clear: when you are building a global company based on technology, then foundation needs to be very strong. At the same point of time, you need to have all the hooks for it to adapt to the changing needs of the company. And I think that is one thing that we have done very well, whether it comes to business, product, and tech. And even today, me and Abhay, when we work together, the single biggest question, I think most of our interaction is not what is happening today, but how do I think AI is going to change engineering, or how Abhay is thinking AI is going to change product. So I think this question is, we always have bifocal lens. One is what needs to happen right now, and what needs to happen, 2 years from now. And our job is to basically build those hooks, build those foundation platform now, so that company can make that transition quite swiftly. And I think that is what I would say is a iterative process that we keep doing.
And in both your words, can you describe what the InMobi group looks like right now?
Yeah, I'll start. I mean, InMobi is a consumer internet company that is built in an AI era. We have two scaled platforms. We have a scaled advertising platform, and then we have a scaled agentic commerce platform. Uh, Primarily, as an organization, we are very, very innovative in terms of what and where the consumer attention is or going to be in the future. When we started about 17, 18 years ago, or maybe 2 decades ago, the consumer attention was beginning to get shifted on the mobile devices. And if we look at over the last 3 to 4 years, it's obvious that the consumer attention will be on the AI interfaces or AI surfaces. Now, the future of the AI surfaces may look very different than what they are today. But one thing that is absolutely true that all these investments that is going in AI will need to be paid for. And two scalable models to make money on AI is going to be advertising and commerce. And InMobi is playing the role in both of them in a very, very, we have a front seat to both of those changes in the ecosystem.
And if I were to just add and give you the analogy on the technical side, I think these foundations are built on the platform that are very similar. In advertising, what we try to do is basically where monetization is part of your content. It should feel like it's very related to what you are doing and in just in time context, and it doesn't on your face kind of thing over there. And what Glance is also doing is basically it's a consumer property. A customer is already in sort of a context, so you get first hand information what is happening over there. And since commerce, Glance is becoming one of the largest agentic shopping commerce platform, so monetization come very naturally underneath the platform. And that is what our legacy has been for so many years, where the ad is nothing but the understanding of the context. What is leading a user to make certain kind of decision is actually advertising, and that's where they fit so well on top of each other.
As a category defining company, I'm wondering what mental model are you currently holding for the relationship between advertisers and publishers and end users?
Look, I think, Dhruv, and it's true for all of us as consumers. If you look at the way you've been experiencing internet, I think internet has stopped being personalized and has become personal. It is actually being generated for every individual. And if you stretch this further, I mean, you're beginning to see new devices come into the play. You're beginning to see new ways of interaction coming into the play. So I actually believe that with every change in technology, there is a complete paradigm shift in how new developers come about and how a new monetization model emerges. So in our sense, one thing that won't change is we have to be absolutely guided by where and how consumers are spending their time. And for that, we don't have to go and look far. We can look at each of our experiences and we know how we are interacting with internet. And the second is we know that all of these interaction need to be paid for in some sort of a financial model which works for the industry. Subscription-based models, which are today funding the AI experiences, have a natural ceiling. And they're not going to go and fund all the capex investments that are going on in terms of the AI experiences. So as newer and newer AI experiences will emerge for the consumers, there is going to be a valid commercial model either driven through agentic commerce or through agentic advertising. So in some sense, the relationships is not going to look very different. Consumer is going to give their attention whether directly or through their agent. Advertiser is going to pay for that attention through either a direct ad or through an agentic offering. And there's going to be publishers or developers in the world that are going to create new surfaces and new experiences on which consumers will be interacting. In fact, Glance is one such scaled surface in the world. And there are many such scaled surfaces that are getting created where the consumer interaction is now moving to. So I believe the relationship is going to, economic relationship is going to remain the same, but the way it is going to manifest is going to look different.
And Mohit, you as a CTO have lived through three different eras, like mobile ads, programmatic, and then now AI, which I think you described as Glance's agentic shopping experience. What changes do you expect in the world of advertising now when agents are doing the decision making or sort of helping you in shopping and commerce?
Look, I think one thing which I would say blessing in disguise for us was when we started with the mobile, uh, building anything at scale from this part of the world was very hard. Mobile is very unforgiving surface at that point of time, huge latency challenges. In 2008, 9, the network, very unreliable network, call drops. So you can imagine what would happen to internet. So I think that has led to a very disciplined approach for us to build the software that can run on scale and it can handle any kind of failure. That is fundamental to anything that you do on engineering, and it doesn't change. Then come the era of programmatic, where you have to make very highly complex arbitrage decision at a fraction of time with trillions of iteration on single day basis. So the problem remains same, but it got compounded. So your engineering and your discipline further went into hyperdrive at that point of time. That what I would call the second phase of our growth. AI was still there. If you think about it, today we associate AI with ChatGPT or LLMs. Neural net transformer, these models were there in 2016, 17 as well, and we have been using DNN even at that point of time. It's just that now you are able to converse with it, and the new model, as Abhay was saying, new search is now conversations with the chatbot. They started to come into the play. So a lot of our model, which used to be pure mathematical regression or statistical, have moved on to more frontier and foundational model. Especially on the glance side, where you have to do a lot of imaging. But I think as an engineer, one thing that I want to tell you is that's 5% of the problem. Even when you build a very complex, very high performing AI system, the LLM and that setup is 5% of the problem. The 95% is the classical engineering that you always have been doing. How to optimize for token, how to make sure your input that is going to LLM is the right way. Otherwise, you'll be losing your shirt by throwing so much tokens onto the model. Once the output is there, how do you sanitize it? How do you moderate it? How do you basically render it? So I think all that takes a really good amount of complex engineering, and since we have been doing it for so long, it was quite natural for us to basically make that transition as well, and not just glance. In fact, our template on the advertising side are all AI stitched. They are stitched on the runtime.
And if you were to ask you to pull out a few pages from your global expansion playbook so that it can be relevant and useful to founders, who are a few paces behind you in their journey, what would you pick and what would you share with them?
I think so. The first principle is basically for building any global system or businesses that you have to disassociate scale of your system with people. If you think that, hey, if Abhay comes back, and this is actually what Abhay did, he used to go, and I'll have Abhay share the story, but he would go to China, he would go to Southeast Asia, he even went to South Africa, Nigeria, and whatnot. And if he sees the opportunity, he would come back and he would tell the product and engineering team, hey, I want to go live in South Africa. And the question is, can we do it in 2 weeks? And if you have the software that is built to scale, it's a horizontal scaling. All you have to do is deploy some more server, your software gets over there, it connects to your mothership, and everything works like a charm. All these design initial days, it takes little time, it takes little discipline, and obviously competency and skill that we invested early on. But once you figure out this script, once you do this hard work early on, when you are still small enough to deal these kind of complexity, I remember some of the people would come and say, hey, why you are setting up second data center? You don't have enough load. But the second data center that we were setting up in US, it was never about the load. It is, can I maintain the latency? Can I basically make my US publisher happy or US user happy, where my ad is loading in few milliseconds? That was a problem that we were solving, and we invested in it where our scale was very small. So right problem got solved at the right place. Imagine if you are dealing with a very big scale and now you are trying to take it to the next geography, you have to go with a bigger problem. So I think take the hard calls early on. Design your system where lack of human should not impact their scalability and stability. I think these two things, they go a long way. And a classical first principle thought process when you are architecting and designing your system is very important.
And maybe
Now,
if I may take this question a little bit further, I think first of all, being global is a mindset. I tell this example to a lot of people that creating a good business is like solving a Rubik's cube. You can't solve it one surface at a time. If you need to succeed, you need to solve all 6 surfaces together, which basically means that your product, your global GTM, your platform, everything needs to be operating in a sync for you to be able to solve this. And that is one of the biggest learning and lesson that we have had, that it is actually far easier to develop in India, and it is far easier to sell in the US. In fact, a lot of times, a lot of people think, oh, selling in the US is very complicated. Believe me, the kind of challenges that India offers in terms of the complexity is orders of magnitude higher than what it is in the US. US does not have so much of language complexity. US does not have so much of regional complexities and so on and so forth. So it is far easier to develop for the US if you can develop for India. And it's far easier to sell in the US than it is to sell in India, because India is still, I mean, it's growing, it's a beautiful market, but it is still relatively a smaller market with a far higher competition than in the US. So I tell to any founder that I work with that, look, aspire to be global. You can only succeed in global market when you believe that you can succeed in global market. There is no other way, and you can't do it sequentially. You need to absolutely do it beginning the day one. Now, capital is important, technology is important, right team is important, risk taking is important. None of that I'm taking away, and that I think entrepreneurs take it from the day one. But it's the mindset that is probably one of the most critical one. So, going and expanding in Southeast Asia and Dubai is not going global, is what I'm probably guiding to a lot of people.
interesting. But can you also share your perspective, and just to double down and maybe go one level deeper, I mean, you've held your ground as an independent player against Google and Meta. And what can you share from defending your position in a world that's coming up with AI and LLMs and everything, and agentic commerce as well? How did you build and transfer these moats to the world that's coming up?
I'm also going to bolt on to that question and just ask you, how different is it to serve the Android ecosystem, the iOS ecosystem? And maybe you can answer all of that together.
Look, I think when you got to compete, you got to compete. Like, there is really no, I can't make it any more easier or more difficult. It's like if you decide that you got to play in Eden Garden, then you will prepare accordingly versus playing in, outside my house in a gully cricket. So what I would say is that if you're competing, you got to compete very highly. Now, you also need to make interesting decisions. Like, for example, if I were to take some example from one of the most important decisions, and this kind of goes back to 2011 and 12 when we were expanding. Look, in India, we're always a mobile first market because we never had desktop and or internet prior to it. So kind of India grew up with mobile and mobile economy. We have an app for everything. In the first 5 years of InMobi going global, when we will be going and selling in the US, people would be thinking mobile as an add-on device. It wasn't the mainstream device. And we would go to China and India, and nobody talks about internet on the desktop. So clearly, when we were going into the clearly we were going into the US, we had a lot of temptations from our advertisers to actually expand and become an omni-channel player from the day one. Now, if we would have become an omni-channel player at that point in time, which clearly was the strength of our competitors in the US, we wouldn't have been around at this point in time, because you can only compete in an area where you are really good at. You can't compete in an area where everybody is. Like, we don't want to compete in a red ocean. So good point about InMobi is we found our niche. We stuck to our niche. In fact, it's only in 2023 where we decided to expand to an omni-channel player, and we started to bring web and CTV into our foray. Even till today, 90% plus of InMobi's business comes by mobile app advertising, where we are one of the largest distributed SDK globally. And that is the power of compounding. So in some sense, if you got to compete in a market as large as US, you cannot be everything to everybody. You need to be really, really good in your area and then keep going extremely deep in it. And that market really respects and pays premium for being a specialist. This is absolutely contrast in India. Like in India, if you look at traditional businesses, they're very generalist. Like they would do everything because probably the market does not still have depth in each of the areas. And hence, there is a lot of journalism. Like if you're a product company, you would also do services. If you're a services company, you will also do support, etc., etc. So that was, I think, one of our biggest learnings. And that's why we've remained very, very focused. In fact, Glance has been launched in the US only in the last 6 to 7 months. We were preparing it, perfecting it, testing it out with hundreds of millions of devices in India. And when we felt that we were really ready with our agentic commerce is when we are taking it to the US. And long before we know, it's one of the most successful consumer properties now. So in some sense, what I'm trying to make a point is that if you got to compete in the US, you got to really compete with focus, intensity, and perfection in the area that you're choosing, and not really defocus and diversify into many areas, because that's a sure shot way to fail.
And the other aspect that I just want to add, what Abhay is saying, focus along with that is, I think having a aspirational competition is actually really good, because what it does is, you really have something to look up to, and your own benchmark, to do good gets all of a sudden, you raise the bar internally. So I think right from the day one, we were competing with Google and Facebook. And rather than basically getting intimidated by them, all our conversation used to around that, how can my system be that good? Their search scale is this, their web server is like that. So I think it has really done wonders to our engineering. That was one of the part. The second part is, look, I think we all know this. There is no shortage of talent in India. We are just capped by our own imagination, and we have not taken those aspirational battle early on, which we are taking right now all across. So I think once you have the aspiration, ambition, and you have the talent, I think you can actually compete with world class. That is the beauty of free economy and competition led world. So same goes for Glance, same goes for advertising. We compete with them, with Google, Facebook, in their backyard, on their turf, and it's a fair for all game for all of us. It pushes us to basically deliver product that can compete with them and win on its own merit.
And I mean, there are two questions. There's one in the audience and one I have. What is the scale of the different businesses that we're discussing right now in terms of just numbers, or any reach numbers that you can share with us? And from the audience, when it comes to AI, what would a winning moment for India look like?
So I'll give you some numbers with respect to our scale. InMobi currently processes about $2.5 billion of media across about maybe about 3 billion consumers across the world on different properties. We serve close to about 2 trillion ads in a month on pretty much all sorts of devices, whether it is mobile, TV, web, desktop, etc., etc. So, and we do that across about 170, 180 countries in the world. So it's a very large scale global operations. And thanks to Mohit and all of our team at InMobi, we've managed to run a system that has very, very high availability at precision and scale that world-class systems will rival off. In fact, we've gotten a lot of accolades from our partners on having the lowest latency, having the best throughput, and having some of the algorithms that are actually delivering results in microseconds. So it's a very, very evolved system to deal with the scale. And in our industry, typically, the complexity increases multifolds with the scale. So if you're actually not planning the systems to be operating at this sort of a scale, you'll actually crush under your own weight. And that is the problem that happens with a lot of large scale technology systems in the world. And then I think your next question that you were asking, what could be the shining moment for India AI could be. I'm actually a very, very big believer that as India, we do one thing extremely well. We are great in developing applications, and we are great in testing out that application into the diversity that is India. So I think the shining moment for India AI, in my view, would be if we can come out with maybe n number of AI applications or AI experiences that can scale globally. And I'm seeing a bunch of different examples. Glance is an example. Pocket.fm is doing an amazing work in terms of taking it global. And there are so many different entrepreneurs that I'm aware of who are all taking this change or shift in technology and actually thinking with a very global mindset. So, and the beauty with India is, one success leads to 1,000 more people in India trying stuff. And out of those 1,000 people, 10 will succeed, and those 10 will lead to 10,000 more people trying. So we have this very huge exponential growth curve where if we can just keep trying and trying and trying, I'm sure we will land at much more greater opportunities than what the world has seen. And that is, I think, India's biggest shining moment.
And Mohit, do you want to add something to that?
Yeah, I'll just add two things. So, I think our scales are, so we are a global company all the way from Japan to Hawaii, almost every continent, every country, every state, InMobi services are there in terms of either glance or our advertising units. So there is never a dull time, so now China traffic may be going down or going up, Europe will start to pick up, and then US and so on. So all our systems are always humming with millions of QPS. So if there are engineering folks in crowd, that's a pretty massive volume. Very few companies in single digit who handle those kind of volumes. Our systems are also quite advanced. Even some big player, we use GCP, Azure, all of them. Even they have to plan for months to take our new region, because our volume comes with so much daunting workload that you just can't scale. So that's one thing that I'm quite proud of, and something that you can always relate to in InMobi scale. The next thing, as Abhay said, we have a very uncanny ability of building product for the world at a price point that is never seen before. I think that is one of the things. I believe AI is still quite expensive. And the way we are doing things on Glance or Pocket FM or many other companies that are going to come, I think we can really lead the way to do it at a price point where it will start to make sense for entire developing economy. Not only just India, but entire Southeast Asia and Africa. Who can spend $200 a month, just doing the chat on Claude? It's just unfeasible, So I think if we have to make AI useful for everyone, every corner of the world, I think that innovation is going to come from India. The way we launch Mangalyaan with $10 million budget, I think fairly soon you will see that this country will show the world that how do you use AI at a fraction of the cost that can be consumed any place in the world.
I think I want to ask you, gentlemen, as a consumer, what is the bold but realistic expectation I can have from InMobi and your peers and partners in terms of creating a jaw-dropping sort of buying experience that is so personalized across the device, and then even the invisible advertising infrastructure behind it that completely blows my mind?
Look, I think, first of all, a great technology is the one that absolutely feels like magic. And if you have got a chance to use Glance app on your phone at any point in time, I would just ask you and your listeners to give it a spin, and you would actually feel it to be almost like a magic. Look, our entire view with Glance started with a very simple thought that the more visual a category is for purchasing, whether it is your clothes or whether it is your eyewear or anything that is very visual, it's very hard to buy it online because you just can't figure it out. How many of the times we would have, gone to a glasses shop and put the glass on my eyes and looked at my wife to say, how do I look? Or how many times do we wear a shirt in a dressing room and then came out and show it to our partner into saying that, does this shirt look good on me or not? Because that's how usually the visual category products are bought. And I can go on various different categories, but the behavior is kind of very similar. And our simple insight there, Dhruv, was that how do we make sure that you can see a product on yourself, and not only on yourself, but you are also able to share it with your loved and near and dear one and take their feedback before actually making a purchasing decision. And all of that you can do from your own couch without having to leave and brave the Bangalore traffic, which has its own mind. So certainly this insight isn't possible when you stay at the word personalized. You have to go towards internet, which is actually personal, which is created for each individual on the basis of that individual's liking. And in achieving this vision, we've actually ended up creating a shopping model that is currently being trained for over 300 million users. And imagine this personal concierge becoming ready for each individual. This concierge is going to know your preference. This concierge is going to know what you like. This concierge will recommend products for you. This concierge will tell you that if you're going to wear a green pant, you actually shouldn't wear a black shirt with it. You just look ugly. But probably if you have a green pant, then maybe you can pair it up with white shirt. That would look better. And so on and so forth. Like all of these things, we need literally a personal concierge with us. And we're training Glance AI to be most intelligent personal shopping assistant at every surface. Now, whether you're on your TV, it's going to help you with that. If you're going to be on your phone, it's going to help you with that. You're going to be on maybe other devices in the future as they will come up. Glance AI will find its presence in all of those devices. So it almost feels magical. While the 1.0 of internet shopping solved for efficiency and effectiveness, I believe Glance AI is going to solve for inspiration. And that's the magic that we believe this technology era that we are in can really, really make it possible.
You've gone through so many changes as a company, all different platforms, all different kinds of businesses as well. And I mean, technology winds have changed so many times during that time as well. 2007 is when you started. What was one company building advice that both of you received individually? I want you to answer this, which was true back in the day, but it's not true now for a founder.
Look, I'll probably tell you the thing that haven't changed. Because, it's like, and it's not an advice that came from somebody. The beauty of doing it for 20 plus years is you get to make a lot of hypotheses, try to see an experiment and see whether that hypothesis is actually true or not. So one of the big hypotheses that we have literally made it into a mantra within the organization is that attitude comes before smarts, comes before skills. Now, skills are the easiest one to interview for. Skills are the easiest one to hire for. And 90% of the people get hired for their skill set or their smartness. But the longevity of a person and the longevity of an organization really, really depends on the attitude of the people with it. And that is a principle that has not changed in InMobi. You tell about 20 plus years. I don't think InMobi is going to change for the next 30 plus years. No matter how much technology trends are going to come, you'll always find us on the right side of it, because the people that we have are the people that have that entire attitude of being on the right side of any change. So both Mohit and I, we are so humbled by having this crew with us that can literally take any shift in the industry and bring us on the right side of that shift fairly quickly. And that hasn't changed. So tomorrow, if something else changes, that's fine. I'm not worried about it because I can be on the right side of that change fairly quickly.
Yeah, I think two things that I will add is, I think when you start early on, and we were quite young at that time as well. Not that we are not young now. We are young. We're still young. So I think you're so eager. You want to do things so fast, and I think you learn the value of patience. All the good things in the world, they require patience. They require deep thinking. So I think we are much more wiser now, and we know sometimes if you are trying to do as you said, you want to blow the world with some new product and glance. We know it's going to take time, and we have that capital in terms of patience right now. So I think that is what I call a institutional maturity that we have achieved as a company. And the second part that I would say is your ability to deal with failure. Because failure can bring you down. Initially, I remember if our system goes down once, for first 30 minutes, you are paralyzed. You're sad. Why it happened. Versus that, you go, that failure will happen, but how quickly I come out of it, react to it, and then make sure it doesn't happen again. I think our ability to deal with failure has tremendously improved as an organization. As Abhay was saying, we really trust people, we believe in them, and we give them the charter to go out and try things. Nobody's going to hang you up for the dry outside. You can fail as many times as you want, as long as you are giving 110% of it. And we are quite surprised, what people do if with that kind of fearlessness in their mind.
I'm also curious how you. Yeah, I do have one. Maybe you make that a closing question. So, in the different chapters of InMobi up to this point, and we know the book is still being written, how have your investors stepped up and been, helpful and useful? What was it like in the early days? What is it like, again, through the various chapters?
Look, our investors have been, we wouldn't be here without the support of, so many people who believed in us, believed in our mission, supported us with capital, supported us with connections, supported us with introductions, and so many things. I mean, I still remember our good old. We were the very first investment of Mumbai Angels back in 2006 and 2007, and when they were giving us the kind of money that they were giving, each one of them was very nervous because it was also their first investment, and for them to be backing us and backing us until now is just tremendous. I still remember bunch of those people. And InMobi's previous business model was a search-based business model, and they used to come with us, stand in the high street, go to the shops, sell with us, etc., etc. So I have seen the entire investment ecosystem in the world, or especially in India, also grow over the last 20 years along with us. And of course, availability of capital is much easier now than what it was probably earlier. But the capital is also now coming with various different colors. There are investors that are willing to go all out and help you. There are large investors which are largely financial investors, and they can open up the markets for you very differently, and so on and so forth. I mean, SoftBank was one of our best supporters in making us go global. And this was before SoftBank really became a vision fund, and really started to come along. Whether it is with Glance, I mean, we have gotten funding from Google, which has helped us, in so many different ways. Jio, Mukesh Bhai and Reliance is an inspiration to learn from on how to create global businesses and businesses at scale. So I would say that, look, investors are what investors are. They are in the business of investing and getting the returns. But at the end of the day, investors also believe that it's the founders and the executives in the company that are really trying to run. And we've been incredibly lucky that every one of the investors that we have had has kind of never doubted us and always let us truly be imaginative in terms of our global growth.
All right, Mohit, Abhay, this was phenomenal. Thank you so much for making this special for us.
Thank you for having us on this great
Wishing
day.
you all the best.
Thank you very much.
Thank you.
All right, Dhruv, it's you and me. I think there are a couple of things that we should cover, given that we're at episode number 100 now. What has been the experience for you like, Vaise?
It's been fun. There's this thing I think I tell you every once in a while, which is it's a little bit like running, which is every time the camera comes on and we start streaming live, it doesn't get easier. Maybe you get better a little bit, with every stream. Yeah.
But I mean, for our listeners who are tuning in, I mean, for the first time or seeing this, let's describe the feeling like 15 minutes before the show, 30 minutes before the show, on the day of the show. I think that'll be phenomenal for them to just see what it feels like doing a live stream show Monday, Wednesday, Friday, every time at 4 o'clock, and trying to be on the ball, because I mean, there are things that can go wrong. We've all discussed like camera, electricity, lights, flickers.
I literally had this camera drop in my hand once. Do you remember? I had to hold it.
So, I mean, let's take I mean, how was the day today preparing for the show? What do we do before the show?
What I'd say is the show is a little bit like an iceberg product in that, you only see the surface. There's a lot that goes into the making of each episode. I would actually say that for each minute of screen time, maybe there's 10 minutes of prep that not us, but our team puts in, whether it's Yashwin bringing the guests in or preparing the brief. And then another maybe 20 minutes for each minute of, showtime for, after the show to create all of those fantastic clips with with our colleague Pranav and others, and of course Ashok, our producer, who ensures that the stream goes live. And there have been others who've been a part of our journey as well. You guys know who you are. Everyone's equally special. And then, yeah, as for us, I don't know what it's like for you, but for me, 15 minutes before the show, I'm I'm a little nervous, obviously, because, we know who the guests are, but we're still trying to figure out what to ask them. One of the things I've started doing more recently, Utsav, is, of course, we have the benefit of a great brief, but I just sort of leave, if there's something I find interesting about the company or the guest we're going to invite, I just leave some words on a piece of paper so that we can string questions as we go along, and hopefully some of them benefit our listeners. And again, the show would be nothing without the listeners and, of course, the founders.
And we've done this for 100 episodes, 200 plus guests, and I think 150 or 160 companies and funds and other sort of funds and VCs and solo GPs and all kinds of different people that we've covered from the ecosystem, even top operators. We've done one masterclass as well. And some of the episodes have been just phenomenal. We've had somebody as young as 18, Suhas, to somebody as old and experienced as KK sir from Mindtree. So I think the range has been phenomenal. We've also had Paddy Upton, who was a mental conditioning coach for Virat Kohli, Gukesh, the chess champion, and many others. I mean, just
I love speaking with the young founders, by the way, whether it was the one you mentioned, or Naman for that matter, or Sri Purna, or all of the ones who are in their early 20s, etc.
Optimistic about India's future as well, right? And we've not focused on just one particular category. We've done D2C, we've done deep tech, we've done SaaS, we've done AI. We've covered so many different things that it's always good to have so much perspective. We've also put out the transcripts on our website as well. So you can see and read through all of this, use your favorite AI, LLM chatbot and parse all of them through, and you can extract some learnings for yourself, apart from the clips that we put out on our social media as well. Yeah, but I mean, Monday, Wednesday, Friday, I mean, the first thing you wake up, you know that something is coming, like it's a show, then you go to the calendar or Notion and prepare for it. Some shows feel very different. Like today was episode 100. I mean, this has been in the making for over a month. I mean, kudos to Yashvi and the team for pulling this off. I think just the sheer nervousness. I mean, we've spoken to somebody who's running a listed firm. I mean, Ronnie Screwvala has produced some of the most iconic movies. He's running upGrad. And just a solid personality in general. And InMobi, the first unicorn of India, two others which are filing for an IPO or going to file for an IPO. So imagine the context switching that is needed to chat with 5 different people on a on a live stream show, man. Like, I think it's a lot of people don't appreciate that fact enough. So that's why I want to keep on repeating it. The original inspiration, I was in touch with somebody from TBPN. And honestly, they mastered this show. It feels like a sports center / ESPN for tech. And we wanted to give India something like this, because you see these fine edited podcasts, which sometimes don't tell you the raw, unfiltered version that we want to bring out on TON. So that for us was key. That
I
let's
think
do
that's the key insight that you had, right? Which is when you first, and if you'd like, I can share the story of how I got pulled into this project, which is really funny.
Why not?
I don't think we'll get to that story in just a bit, but that's the original insight you had, right? So, which is that there are all of these headlines that we are seeing across the publications. And then there are podcasts that get into origin stories that are really backward looking, and there's nothing in between. So, how do we sort of go beneath the surface of those headlines? And that's really been our endeavor with this. And the thing with TBPN, right? Of course, great inspiration. By the way, it wasn't until the first month or two of the show that I even saw what a TBPN stream looks like.
Yeah. But they're slick. I mean, they do this full time, of course. Very refined product. But I think for us, the idea was not to build something that's too heavily edited because not even edited. I think the idea was not to build a product. I mean, you go to our first stream, you'll see all the errors and issues and the bad screen that we had. Now we have a proper background and better camera and better mic and better setup, just so that we think visual appeal does matter to some extent. If you're giving a product, then it should feel nice for people who are giving you the time and that effort. You're paying with your time, basically, to tune into TON, and we want to be respectful of that. So that's why we defined the product to a point where at least it's appeasing to the eyes.
And I think like with the TBPN reference, right? Like I think it's obvious that TBPN is not going to come to India and cover news in India. And so we borrowed from TBPN what TBPN likely borrowed from ESPN, and that's the way you build stuff over a long period of time.
100%. How did we get you onto the show, Dhruv?
Okay, so funny story. Now I have my version of this. Maybe you have a different version of this, but if I recall, once you saw TBPN, we'd started chatting about what TBPN is, but I thought it was another cool thing that you'd seen. And sure, I was supportive, but I had no idea that, you're actually going to pull something similar off for India. And then I remember I got added to a Slack channel and I had no idea why I was there. And then I remember this one time when Hyrox happened last year in July, I was coming back from the race. And on that Slack channel, you sent me a poster, which has my picture on it. And you're like, what does the poster look like? I'm like, the poster looks nice, but मेरी photo क्या कर रही है वहाँ पे? And next thing you say कि अब equipment आ गई है, come home and pick it up. And here we are, episode 100.
The reason for that is that I know Dhruv because of AngelList India, and we've spent a few years working together at AngelList India. And also after that as well, we maintained a good working relationship and we become personal friends also. And you can see the difference in our questions. Like I am more financial, pointy, chill, casual. At some point, Dhruv is very well read. Like I think he's read probably more books on more different topics than I can probably. Even if I start now, I won't be able to complete.
Ashok stream ko kaat do. I think this is where we.
I mean, he's so well researched, and I mean, you can see as an audience. I think you can tell the difference in our quality and depth of questions as well. So I cannot imagine doing this with somebody else apart from Dhruv. And truly, that's why I didn't check before putting your photo on the picture.
It was so. But honestly, Utsav, I think the real stars of this show are and always will be the founders and also the listeners who devote their time. And that's why, I mean, nothing against Shark Tank. Shark Tank is amazing, but it's not clear to me why the stars of that show are not the founders, but the sharks. I mean,
that's for entertainment, to be honest. I think they've also played their role, where I think Shark Tank popular.
They have, like anything.
Yeah, so I mean, of course, it educates people in some format, but I think most people tune in for the entertainment aspect of things. But I think here we're trying to give you a 20-minute segment with the founder who's probably made news recently or will make news in the recent times or in the near future, and just break down the headlines in their industries. Like, I mean, if you've tuned into even 50% of our episodes, you're probably learning more about the state of affairs of startups, deep tech, company building in India than you have maybe while even doing an MBA. For that matter, to be honest, I think it is pretty exciting.
TON is the capsule MBA.
Yeah. All right. So here's to the next 100 episodes of TON. Thank you so much for tuning in, and we'll take a short break. This 2.5-hour stream was definitely something that the team has worked really hard to bring to life. But so let's take a week off. We'll see you next Wednesday. Thank you so much again for all the love and support that you've given us. Thank you. Bye-bye.